Get it. How's it going, everybody? Hope everybody had a great week. It's NFP week. I'm normally not trading heavily this week unless I'm permitted, but I definitely didn't look at NFP. Did expect UJ to pull back up, and we're going to talk about all those things, but I'm just waiting for a few people to join. I'll close my door, and we're going to get right into this. Let's go. All right. Nice. All right, cool. Hope everyone's loved ones are safe as well. Hope you're healthy and safe as well yourself. Let's get right into it. So, weekly review. So, normally what I do is I go over a couple pairs and I break it down from Sunday to Friday. And we use the weekly range or the weekly opening price. I have this labeled wrong. This is the weekly opening price here. There we go. Now, the weekly opening price is going to be your gauge to when you're overbought or oversold. It's very simple concept to follow. You find your weekly opening price on Sunday. Now, if you don't have a Sunday's opening price, I would use Monday's opening price. But I believe most people have TradingView accessible to themselves, and they're most likely able to see the Sunday trading range right here. Sunday to Monday, all that Sunday. Because many people question how I find the Sunday's opening price. I honestly just go to the 1 hour and come down here to 1700. And that's Sunday's opening price every single week. Once we have that laid out, we know where we're going to hunt the buy and sell setups. And it's very apparent every single week. You'll see this. It's very apparent where the buys and sells are forming. When you look at it from this perspective, at least, you can see it gives you a total 20/20 vision on where high probability buy scenarios and high probability sell scenarios unfold. Clearly, high probability sell scenarios occur above the opening price because it's a premium. And now many people may say, you talk about this all the time, but it's very crucial. Something this small makes the biggest difference in my trading. Something this little. Anything above here is a premium. I'm looking to buy. Can't even spell. Above the opening price. Buy. I'm always saying things backwards. I'm looking to buy below the opening price and sell above the opening price. You can see Tuesday as well makes the high of the week for DXY. Normally on these 3 days, some people like to include Sunday. But me personally, Monday, Tuesday, Wednesday, we all know that it's most likely going to create the high of the week if it's going to be bearish. Now, you don't know if it's going to be bearish. Because some people say, how do you know that Tuesday or Wednesday or Monday is going to be high of the week? That's a little more difficult. But there are ways to figuring that out. Monday normally we would avoid. Because we want Tuesday or Wednesday to be the high. Because we really want to be selling after breaking a high. That's why I opt out of Monday and wait for Tuesday or Wednesday. Because then I have the opportunity for price to take out a previous daily high and then sell. We can see here on Tuesday, it runs Monday's high because there's buy side liquidity above it. So it purges buy side. I gotta get out the door. Give me 1 second. I apologize. Okay, I'm back. I apologize. I had to let some people in the house. Monday, highs ran on Tuesday. And we know the commercials are most likely selling. Their best opportunity selling any market is after price takes out a high. Now, why is that? Because one, price is higher. It's much more expensive. And you're liquidating people above that high. So anybody that was selling, they have a stop loss above this high. Whenever there was a turning point to go down, someone placed a stop loss above this high. Tuesday runs it out, and you can see it goes short. So it purges buy side on Monday, and then it reverts back to what? Monday's low. It runs all the way back down to Monday's low to sell side liquidity. And where is this all forming and where is it happening? In a premium above the opening price. Now, there was some setup or opportunity, probably London, New York, or London close. That could have been a good scenario for you to sell after breaking this high. That's normally where your best sell opportunities are going to unfold. You can see it's all aligning here. Premium, break a previous daily high, premium for the day itself too. So this is midnight opening price. The same ideology here. For this, it's unfolding here intraday for Tuesday. That's midnight opening price. So I'll just use the acronym MOP. And anything above that is a premium as well. Now, I've talked about this idea many times as well, and it sounds redundant, but it's really crucial when trading. I feel like everybody needs to know this information. There's no excuse to why you don't know where to sell or buy during the day, because the indicators aren't telling you that. The RSI, the moving averages, the Ichimoku cloud, those indicators are not telling you exactly where the market is overbought or oversold. It's a lagging indicator. So by the time the indicator tells you, oh, sell opportunity, the market probably most likely left you already. Or it's a false signal, and the indicator is completely wrong. Midnight opening price can never be skewed because it's always there every single day. It's the opening price. The weekly opening price, Sunday's opening, it can never be skewed. It is history. Once it prints that candle and opens, that's it. It's done. The brokers are not going back in and changing the opening price. It's done. And you can see they sell off here in London close very quickly. Thursday makes the low of the week. Friday does not close lower, but closes a bit higher off of Thursday's low. So you can see there's some type of buy scenarios unfolding down here below the weekly open. And that's simply the NFP week here. Seek and destroy. I most likely figured that dollar was going to pull back, make a higher swing low, and go higher. And we'll talk about that with UJ. Same thing here with UJ. Looks almost exactly like dollar because they are directly correlated. It's dollar versus the yen. Tuesday runs Monday high, so it purges and it quickly reverts back down to Monday's low. You can see the sell opportunity unforms right here in London close. There's a fair value gap here. You see price taps into it and it sells off ever since. Where is it occurring? Above the weekly open. That fair value gap is physically printed in a premium condition. It's not below the weekly opening price. Think about that. The fair value gap here is physically printed above the weekly opening price. The algorithm places fair value gap in a premium for a reason. It is used to then carry price lower. You can see how it taps right into it and it continues running lower, all above the weekly opening price. High probability sell scenario. Now for this day, it wasn't above midnight opening price, which there would have been a conflicting interest here. So it's below intraday midnight opening price, but it's above the weekly opening price. The weekly opening price for me trumps midnight opening price, especially if the context allows for it. So it takes out the previous daily high, consolidates. It consolidates all the way through London, all the way through New York, and until London close, it makes its big move. So all of that's consolidation. They're building in buy side and sell side sentiment once again. And generally, if you look from Monday all the way to Tuesday, that's all consolidation that you're viewing there. All of this here, it's just consolidation. They run up really fast and they run down really fast. And during that run down, there is a busy here, which is this fair value gap. And I'll make it a little brighter so we can see. You got that SIBI. Sell side imbalance. If you can get this correctly. There we go. Sell side imbalance, buy side inefficiency. There's a shift occurring here. It's running a swing low. And you'll see this time and time again. This setup is very similar on all time frames. I'm just showing it here on the 1 hour. You can see it runs that swing low. That's your market shift. because it's running through with speed to the downside. That's what this is. The fair value gap is simply just speed in one direction. See how large that candle is? It's very obvious that someone in the marketplace stepped into the market. That's just a fingerprint or a footprint. It's a hint of somebody here sold for sure. And it's causing the market to shift lower. And it even takes out that previous daily low in 1 hour. That whole 1 hour candle is larger than any other candle for the day on Tuesday. That one candle itself. So you know there's some backing behind this candle. It's a large candle. And what happens after large candles? Normally you get smaller candles. Large range to small range. It's the same thing on the daily, same thing on the 1 hour. Look how large this candle is. After this large candle, what is most likely going to occur? Smaller candles. The market jumps back into a smaller range cycle here for Tuesday, as we can see. And the same thing on the daily chart. When you see a large daily candle and then the next day it looks like nothing happens. And after that small candle, you eventually get a larger candle. And you can see it happens here. Price finally starts to give way again, leaving this area. It clearly didn't want to go any higher into this after printing this large candle down. And the same thing unfolds again. What's this? Same thing. And this is happening during Asian session. You got speed through another swing low. Where is this fair value gap being printed? Or this SIBI being printed at fair value? Physically on the weekly opening price. Still an area of interest. Price taps into it and it goes lower. Doesn't change. The same setup, just unfolded twice, just in different time periods. Market shift here. Market shift here. And I'll zoom in for those that probably can't see. That's that swing low, 1, 2, 3. I know many people ask me how to identify a swing low. It's just a low that is lower than the one on the left and the right. That's all it is. It's a low that has a higher low on the left and the right. 1, 2, 3. That's a swing low formation. Especially when the middle candle is low, its high is broken. So this candle is broken. So it purges this previous candle's low. Then the next candle on the right side reverts back to buy side. That's a swing low. Price is broken by this swing low. Price runs through that swing low here. 1, 2, 3. With speed. There's a short opportunity here, and it happens here early in the day, midnight opening price. So it taps into a premium just barely, one time, 2 times here, and then it finally sells off in London, giving most likely nobody an opportunity to find a clean AMD setup, accumulation, manipulation, distribution. Because every day people go in, and I know they ask, "Oh, I couldn't find AMD." You're not going to get a clean AMD setup every single day. It's going to look a little different. And then overall, you can see Thursday here, we finally get a purge, and then we get a revert back. So Thursday takes out Wednesday's low, and then the Friday takes out Thursday's high. What formation is this? I just explained it. What formation is occurring here? A swing low. You can physically see it too. If I were to draw it out in candles. So if I were to draw this as a daily candle, here to here, like this, that's one daily candle. This is Thursday. We'll move it over. That's one daily candle. And then we have this. We take the highest high. We take the lowest low. That's another daily candle. And then we take Friday, here to here. That's where it was. It was right about here. You take these 3 daily bars. What is that? That's simply a higher swing low that's unforming. But now you can see the context behind what a swing low is actually doing. A swing low is purging one side, the previous daily low. Then the next day, it's reverting back to that candle's high. That's what a swing low formation is. If you look at it from another perspective, it's the same thing here. 1, 2, 3. These large candles represent the day. Wednesday, Thursday, Friday. That's occurring here in this little fractal idea. This middle candle here is breaking the previous candle's low, and then the candle on the right breaks the previous candle's high. Purge, revert. So there's possible buying that's unfolding here, because if the market makers are looking for the best opportunity to buy, it's most likely after they break a low and in a discount. You can see it's a discount. We're below the weekly opening price. And if they run a low and they're looking to buy, it's most likely ideal and dynamic. They break the low and quickly price escalates away from where it broke the low. If we look at the yen futures, we can see inverse occurring. So we can see Tuesday makes the low of the week. And this is Japanese yen because I know there's a few people in the channel that watches the futures. So I just want to include it because it's also my intermarket analysis. I'm using dollar and Japanese yen to basically guide me through what I think UJ is going to do for the month. They should be moving inversely correlated. If dollar's going up, Japanese yen needs to be going down. If Japanese yen is going up, then dollar should most likely be going down. And that's how I'm using the two separate charts. So here, dollar and yen. You can see these are my main focus. I put the main focus on the top three right here. 1, 2, 3. Everything else, I got the majors or the minors. I have my yen crosses, the bonds, futures. I'm very organized. I got real money, which is gold. And I have stocks. You know, a few things that I'm looking to invest in and get a position in. That's how I normally keep myself organized. But when I'm looking at a pair and I'm dissecting it, like let's say I was looking at GU, I'll be looking at basically now GU, DXY, and then I will come down to the futures contract. If I have it somewhere, futures, I would be looking at what? The British pound futures solely by itself. And that's how I normally go about intermarket analysis and comparing or cross-referencing things. But the same thing forms here. Nothing changes. See, now I'm looking at the futures compared to FX. I'm in a whole nother asset class right now. But the same ideas are following suit on another asset class because all the markets are coded the same. It doesn't change. I could be looking at Apple right now, and the same thing most likely is going to unform. Just a little different with the time or kill zones. That's the only thing I would say is different between FX and stocks, and futures a little bit. But I think it's just an hour off. That's the only. It's futures is an hour earlier than FX. So if we look at it Sunday to Monday, where are they buying price once again? Below the weekly open. It's very obvious once you start marking this off. And how do you know you can probably find a buy setup? Let's say you leave Monday alone and you're working off the basis of Monday's high and Monday's low. We'll say the midnight here and here. Let's say we're working off of the basis of that. Because sometimes you need something to reference. You need something to happen in the marketplace, then for you to get in. So if we bring it back, we have Monday's high and we have Monday's low. You have buy side and you have sell side. It's very clear to see that when you look at it this way. I'm not talking to you, Siri. Siri so nosy. Buy side, sell side. Going into Tuesday, what do we run? We run the sell side. Very slightly. Doesn't have to be much. Runs it right there. That's 2 a.m. right here. That's the London Open or European Open. 2 a.m. And you can see how price, after running that low, tapping it again, slowly starts to get away from it because that's where they're most likely buying. And that was the low of the day. Do you see the speed? Same thing is occurring here. It's just inverse of what I'm showing you. This is the buy setup. It's always been in front of everyone's eyes. It's just that a lot of people aren't familiar with what they're looking for. What is that? Another swing high. After breaking a swing low, it's the same idea that I show on the agent session model. It's so funny when you look at this. All the models I've been showing people are literally the same. It's just the time frame that's different. And the higher the time frame, the more I'm favoring the setup for a long-term idea. So if I'm on a daily chart, I'm trying to project the next week, the next 4 days, the next 6 days. If I'm on an hourly chart, I'm trying to project probably the next 3 hours, the next 4 hours. But we can see here, price runs a swing high formation. What makes this a swing high? For those that are still struggling with figuring out what a swing high is. A swing high is simply a high that's higher than the one on the left and the right. That's a swing high formation. The fact that this swing high formation was broken with speed to the upside, that would put me on alert for bullish momentum. Same thing on the daily that I talk about in finding daily bias. This is how you're finding your trend on the time frame. You can see price runs up, sweeps a swing high. What should form next? It's pretty simple. A higher swing low formation should form. And it should be higher than the one that recently formed. So this is a swing low. And we need to see a higher one. So we know this is going to be the lower swing, the swing low, because we already seen the whole chart. But that's the lower swing low. We need to see a higher swing low form, most likely inside the PD array. The fair value gap to the upside. Buy side imbalance, sell side inefficiency. Speed it up. And we can see that's the higher swing low right here. We'll zoom in because some people may say, oh, it's not a higher swing low. It just might not be. It might be a double bottom here. Let's see the lows. Whoa. Yeah, it is a double bottom actually. Almost triple. All these two lows are equal. So, came close. But most likely I would have rather seen a swing low formation. So this low should have been a little lower. That would have been your higher swing low formation. That would have gave me confidence to buy. But all in all, you can see the same idea as well on the fractal idea. Price is purging the previous candle's low here. And then this candle should be reverting back to this candle's high. And then price runs higher. All after taking out the swing high. That's what cues off the setup. The swing high being broken with the speed. The fair value gap. The fact that this was broken. And price is most likely going to higher. And where is the fair value gap physically being printed as well? It's being printed below the weekly opening price. Notice how the algorithm has placed the sponsorship below the weekly opening price. Looks very different to UJ. Look at where the fair value gap for this one is forming. Above instead. Aha. Now the light bulb starts flickering. They're doing this on purpose. Fair value gap, the largest fair value gap that we've seen so far for the entire week almost, basically, besides this one here. This one, huge amounts of speed coming in. And it's below the weekly opening price after taking out the previous daily low. Just remember this. If you're here live and you're watching this, remember this as we go on to the next model or my ideas or tips about finding lower time frame setups. You're going to see that the same idea is just a fractal. It's no different. Just want to check the chat to see if you have any questions. And thank you for everybody that's here. Appreciate you guys and all the support. And I really want you guys to succeed. Like I'm really for you guys. Yeah, UCAD. If someone wants to see, I'll do it. I'll do it for someone named Computer. I'll do it for you. No problem. Am I still sharing my screen? I think everybody can see the screen, right? It's Jules. Hey, Jules. How's it going? Can you guys still see my screen? I want to make sure I'm good. UCAD. Perfect. Shout out to Jules, man. What about a stop loss on the New York setup? All right, we'll talk about that. We'll talk about stop loss. We'll talk about TPs. We'll talk about all that. We'll talk about it. No problem. So if we look at UCAD, this is US dollar versus Canadian dollar. And the quickest way I like to set it up, this is how I normally go about back testing or studying the market. I quickly turn on my indicator session, right? Because it just labels out my days for me. So I know the green boxes is normally going to be where Asian session is or midnight opening price. So that's Sunday. When you use this indicator, many people ask, oh, what's this green box here? It's your hypothetical Asian session on Sunday. That's what that green box is. I don't know why the indicator is coded that way, but it is. I'm not the creator of it. You can see for the other Asian sessions, the green box is physically hugging the candles. Here on Sunday, it isn't. Someone had a question about that. And I have to show you guys my settings too, because I know people want to see how the settings look. That's how I quickly label all the days. Sunday to Oh, it's a Zoom link. Sunday to Monday. And then we have now opening price for the week, which is here. And that's how quick I set up the chart. And I can already start studying or backtesting and starting to comprehend what happened during the week. This is how I review other pairs that I wasn't watching, just to see like how price action formed. It keeps me on my toes. It keeps my skills sharp. So that's the weekly opening price. Now we know anything above it, it's a premium. Anything below it is a discount. And for UCAD today, we can see it was mainly down. And we could see the high probability sell scenarios was most likely forming above the weekly opening price. So nothing has changed there. So compared to the UJ, it looks completely different. UCAD and UJ, there's a divergent. Because we can see UJ was holding up, but UCAD is still breaking down. We can see here, Tuesday runs Monday's high. But we don't get any sponsorship here on the 1 hour. Just looking at it from the 1 hour, we don't see after taking out this previous daily high. Let's say here. Price taking out this high here. We don't see do we see a fair value gap going down? Do we see any fair value gap going down? This is so crucial here. It's the same thing like the Asian session model. This is like hypothetically my lunch session, let's say, Monday. Someone raised their hand. Someone had a question?
Am I able to talk?
Yeah, absolutely, man. What's up?
Oh, hey Dante, nice to meet you, man. Thank you for doing this, by the way.
Yeah.
Yeah. So the reason why I asked you about USD CAD is because on the daily it went to OTE, and I was kind of confused. And I'm wondering if it's a potential opportunity for a swing trade.
Okay.
Since the US dollar
versus CAD.
strengthening.
Yeah. No problem. I'll definitely answer this question a little later in the video for sure, because we're gonna go onto the higher time frame on the daily, on like this chart here, the IPTA chart. So that's normally my basis or my groundwork of where I start from, and we'll talk about UCAD as well. I'll do the whole breakdown for you. Not a problem, man.
Oh man,
Yeah,
thanks, I appreciate it.
absolutely. So with UCAD, we could see there's no fair value gap that forms here after breaking the previous daily high. But when do we get sponsorship to the marketplace? So we let's look at Wednesday. You can see Wednesday takes out the high here on Tuesday. Do we get a fair value gap after Wednesday takes out the high? We do. It's very small. It's not very apparent, but there is a fair value gap here. Is there a market shift though? No. See how this setup looks a little different? There's no market shift here on the 1 hour. But that here is a fair value gap. And what is price still doing? It's still following the code. It's making lower swing highs. This is just a false break. Because you see how price runs up and takes out this swing high here, but quickly runs back down to the swing low. Price takes out the high. Just to recap, there's a high taken here. Then a fair value gap is printed. Doesn't look like the other setup though with the market shift. Let's just take a look at it real quick. Back to UJ. Actually, no, look at yen. The yen pair that we were looking at. The futures. Doesn't look the same. A little different here. It's UJ. Because it's a sell setup. See how there's that market shift here, but that fair value gap down? But for UCAD, we don't get that market shift breaking a swing low with that fair value gap. But the fair value gap does form though. So many people ask me that question too. Oh, what about taking the setup? Why don't you only take the one with the shift? Because I know sometimes the shift may not occur on the time frame that I'm looking at. It may be occurring on a lower time frame, but the one I'm looking at right now still is showing me signs that it wants to go lower because it's one in a premium. UCAD is where? Above the weekly opening price. Where does this PD array physically form? Above the weekly opening price. That's not by coincidence, guys. That this PD array is above here. And then price breaks down. You can see price here is going to keep going lower potentially because it trades into what? This fair value gap here. This to this. So you can see price sells right away after running into this previous daily fair value gap. And then after that, it breaks down because it wants to go lower. It's purging and reverting back. There's the revert on the previous daily low here. Purge is up here on the left side. Here. And then the revert is here. Price comes up here and then comes back down here. So it reverts back to the downside. From here down to there. And ever since then, you can see price just continues breaking down. All the way down. For that's simply a weekly review for UCAD. But we'll talk about the higher time frame perspective in the next couple of minutes. Moving on though. Yeah, I'm listening.
Oh yeah. So like I was more so talking about the longs.
On the intraday?
On the high time frame.
Yeah. On the higher time frame. Yeah, but 100%. We're gonna get to that, no problem.
Yeah, for sure.
Got you. So looking at IPTA for DXY, I'm projecting or spectating that dollar's gonna go higher from macro perspective, because some people want me to go through some macros. Basic macros, I'm normally using seasonality. So I'm going here to the equitychart.com or charts.equityclock.com, and I'm typing in dollar index. Simply just looking at dollar index. I come here to the futures. It doesn't matter if I take the other one. It's the same thing. You can see here for May, it's bullish. Does that mean that dollar is going to be bullish for the month of May? Not necessarily, but it's just insight to potentially what could be unfolding. But what needs to align is the market makers looking to buy? Have they already reached their most discounted price target on the higher time frame? Have they purged higher time frame liquidity? And are they respecting now discount PD arrays to go higher? So you can see May is going up. Now if we go down to the yen, go here. Yen is moving sideways. It's not really specifically taking one side. It's not bullish and it's not bearish. So we go to the Japanese yen futures, or you could do this one too. Doesn't matter which one. They're both the same chart. May, you can see it's sideways. It's not going up, it's not going down. It's very neutral. I'd rather see it go down and be opposite to DXY to give me more confidence that it's really going to potentially move in that direction. So UJ should be going up because dollar's going up and yen's going down. The fact that yen's moving sideways makes me a little skeptical, and I have to watch the price action closely. I can't just fully bank on the macro seasonal chart and say, oh, I'm just going all long on UJ. That's not the case. I'm not going to do that. When I look at IPTA, I'm looking at May and the opening price. So anything above the opening price for May, same fractal idea, it's going to be a premium. Anything below is going to be a discount. So if you're looking to buy dollar, let's say you're looking to buy dollar this month of May, right now would be a good opportunity to be looking for longs. Why? Because it's cheap for the month. That's the simple reason. Now, you may not get the exact low, or you may not get the exact pinpoint reaction where it shoots up high on the lower time frame, but you're trying to position yourself here long during this month if you're suspecting higher price action. For example, if you're looking at March, let's say today was March. Let's say today was March, whatever the date is. If you had the opening price for March, which is here, that's the opening price, that blue line. If you're looking to sell, clearly selling would have been above the opening price. It's most ideal to you as the trader to sell above March's opening price. As you can see, it literally did that. It pulled the traders, retail traders at least, to the wrong side, created a swing high formation, and then broke down, and then created a lower swing high formation and continued the breaks down. Doesn't change. I'm on the daily time frame, and the same thing is unfolding. What's happening here as well? It's purging a certain old high, and what forms after that old high? What is this? A fair value gap. Price trades right into it and then trades lower. That's not by coincidence. And where does this fair value gap form as well? It's so crazy when you're looking at it sometimes. Where is this fair value gap forming? Above March's opening price. You can't make this up. The PD array is physically forming in a premium territory for the month. The algorithm did not print this PD array in a premium for no reason. It printed it there for a reason, because they know that that's where the market makers are most likely going to come back, reinstill their short positions in it, and it drops lower. So it goes from premium back to discount. They buy it cheap again, back into a premium above the opening price, and then they sell again. Isn't that not genius? Absolutely. And when you see this, it just doesn't stick for most people. But when you see this time and time again on all time frames, on all sessions, on all intraday setups, you're just like, oh, the market is just all coded. Has to be. There's no question about it that this market is not coded. It's 2023. And I think if you've been trading for more than 4 years or 2 years, you realize everything is rigged to the T. Everything. Stocks, cryptos, bonds, whatever asset, commodities, whatever you want to name. U.S. oil, crude oil, all that's all rigged. It's all fake. The price action isn't as real as we think. It's all engineered by a certain entity in the marketplace that has the largest funds. Without the commercial speculators, none of us would be able to trade, because it's their liquidity that actually prints these candles. Think about that. It's their physical money that allows the market to even exist. Without them, there's no trader. There's no me. There's no small speculator. And there's no large speculator either. The commercials are on top. So there's a pyramid. Commercials are on top. Next, we have the large specs. And then we have small specs. That's the pyramid. That's the caste system right there. Without these guys on top, unfortunately, this market wouldn't exist. It's not the other way around when people say, oh, the people make up the country. It's not like that here. The playing field is completely different. Without the guys at the top, bottom guys wouldn't exist. Promise you. We wouldn't even be allowed to trade if these guys didn't exist. That's just how it goes, unfortunately. And if you know that, then you know that the market is rigged and you need to be doing certain things that these people are doing. Am I sitting here trading like an interbank trader? No, I don't know how they're trading, but I do know they're not trading off of retail logic. I know that. So that's DXY. I want to see this swing high broken. Now, I said if this swing low is broken, then I would like to see price go higher as a false break. And it's creating what? If it's going to go long for the month, and this is a real gem, pay attention. If it's going to go long for the month, it's most likely going to pull the traders below the monthly opening price and create a swing low below the opening price if it's going to go long for the month. Don't believe me? Let's look at another month. Let's look at February. We can see in hindsight it's going up, right? This is the opening price. We'll make this a different color so we're not confused. That's the opening price here. What happens after this? It creates a swing low formation below the opening price. And it goes long. It's the easiest thing to see sometimes. What does it do? It does a false break. So it runs this low here. You can see how it runs that low. And after running that low, it runs quickly back up to a swing high. Purge, revert. Nothing changes here. It's purging, swing low, sell side liquidity, and then reverting back up to a swing high quickly. And price continues to run higher. But look at how the swing low is engineered below the opening price. Look how for the down month, the swing high is inverse now. It's completely inverse. A swing high formation. So it's like making a top. It's making a top above March's opening price, then selling. Doesn't matter what month I show you. It's always going to be the same thing. If you tell me that January went up, that means I know that there was a swing low formation that formed below January's opening price. If you told me that March went down, I know that there's a swing high formation that formed above March's opening price. Doesn't matter. If I'm suspecting DXY to go long, it has to most likely create a swing low formation to go higher. If it's going to go short instead, it's going to create a swing high formation. Oh, it ended. No. What just happened? That should have never happened. Oh, no. Huh. Is this not unlimited? What is going on? That is not good. Luckily, I'm still recording, but that wasn't good. Whoa. Copy invite link. I apologize, guys. The link was not unlimited. That was my bad, man. That sucked. I don't know why I did that. Oh, the Zoom is not even on here. Ah. I'll make you host. I like that. Cool. Who is this guy? JN? JN's cool. JN is. Haha. We'll do it with JN. Should launch. Oh, there we go. Where's JN? Oh.
Hey Dante, I made you host.
I appreciate that, man. Yeah, I apologize, guys, for the technical difficulties. It's still screen recording. I thought that Zoom was unlimited. Guess it wasn't. I apologize, guys, for that. That shouldn't have never happened. I still have the recording running all the way through. But sorry for the hiccup. Let's hide the floating shoes, and we're going to get right back to it. Like I said, if this month was going to go short, odds are it's most likely going to form a swing high above the opening price. Doesn't matter what month we're looking at, guys. I don't care if it's January, March, February, April, December. It's the easiest thing to see. If you think the month is going to go down, let's just go. If we were to pick a random month, let's just say October. I don't know. October 3rd to November 1st. Choppier month. Yeah, this is sideways. Let's pick a month that's trending. Let's say August. So August 1st here to September. Look at how below the opening price here. Doesn't matter the year, because everyone thinks, oh, you're cherry picking. Doesn't matter the year I pick. We can see how it creates the swing low formation physically below August's opening price. This is August opening price here. There we go. The opening price is forming below August. It's not by chance, and it's not by random at all. Same thing here for September. September is a bullish month. What happens? It forms a swing low below its opening price. Look how they're convincing everybody to go short. Everybody and their mother is probably thinking to themselves, oh, dollar's going to go short. And what do? They lured all the sheep down below the opening price, and just for them to buy it cheap. So when you start viewing the market this way, you start to have 20/20 vision, and you start realizing setups come much more easier when, one, you predict the higher time frame bias if you already broke down where price is going to most likely go from a macro perspective first. Then the price action comes second. The key is, though, the price action. It needs to align with the macros. If we look at UJ, doing the daily updates, if you've been staying up to date with it, You can see a higher swing low has formed. It's higher than this one here. And where's the speed coming in? It's the same higher 1 hour idea that I was showing you for intraday on the weekly range. The same thing is occurring here on the daily time frame. There's a busy or fair value gap breaking swing highs. This one and this one. That's what all these caution signs are for. That's a bullish momentum shift most likely unfolding. But what gives me more confidence to get that bullish momentum shift? The swing low formation. Where's the opening price for May? I don't know why I had it up there. The opening price is here. Where's this swing low forming? Below the opening price of May. Isn't that hinting towards something? It's most likely going to pull retail traders short and then they're actually buying. What does this look like as well? This looks like another month and it's right here. Look at February. This is the opening price for February. Look at that swing low that forms below the opening price for that's not the opening price for February. Where is it? Right here. There we go. That's the opening price for February. Look at how they create a swing low formation below the open. Not coincidental. And then they create a fair value gap within the range of fair value. Look at where this PD array, this fair value gap here, it's physically forming near fair value. It's not below discount, like the whole body, the range that I highlighted. It's not below the opening price for February, but it's relatively close, and the candle itself touches fair value. This is still an important fair value gap. Even though it doesn't form in a discount like we would like it to, it's still relatively important because it causes a market shift as well. Look at the swing high. Breaks a swing high. And what does it do? It creates a higher swing low inside the PD array to push price higher. So price comes down, probably causes a false break. Speed, higher swing low. Continues going higher. What's happening right now in price action? We could be seeing the same thing. May not look the same, right? But they often are similar. The setups are often similar. Comes down, comes up, comes back down, and most likely is trying to make the swing low inside this range. And it's probably going to push higher again to take out the 40-day high. If you look at it inversely compared to the yen, it's no different. Japanese yen. Since it's inversely correlated because it's going against the dollar, you can see it's a mirror image. Swing lows are being broken. And we can even see it's two, just like on UJ, it was two swing highs being broken to the upside. We can see it's two swing lows being broken to the downside with the SIBI instead. I'm expecting a lower swing high to form. Why am I expecting a lower swing high to form? Because it broke a swing low. We shouldn't see price get back to this swing high, because then that would mean this was just a false break. If price breaks down, takes out those swing lows, and comes back up here and takes out this high here, this is just a false break. That's how I'm identifying false breaks. Now I probably have more confidence to say, okay, market's probably just turning around and is going to go higher. But if I see price now break down here with this lower swing high, if I see this third candle's low broken the next day, then I have most confidence that next day is just going to start trending lower like that. And eventually we're going to get a pullback. But it's going to do what? Just create another lower swing high. Nothing changes. It is that simple. That's how simple I look at this market. This is how I'm finding the daily bias. Not one time did I have to mention COT data or indicators to predict where the market is most likely going to go, because none of that stuff really truly matters, guys. None of that stuff matters. A lot of the things in Forex that we think matters doesn't matter. The news related stuff like NFP and all that stuff, CPI numbers, everybody think that matters. It doesn't matter. We had CPI numbers come out on, I think for UJ, no, for, was it UJ? No, for gold. For America. We had the CPI numbers come out for gold, and I know people that are watching that are gold watchers are excited. because I'm finally talking about gold. It's been a while. FXN, hopefully it's set properly. And it's not set. Great, it's not set. I hate that. Should paste the indicator exactly how I want it. That's not the right one. There we go. Nice. Let's see where that setup was. Where was it? Settings. And we want the news events. Nope. There we. Oh, it's PMI. It was the PMI numbers. And people were telling me, oh, we have news. I remember in the chat, someone said, oh, what about the news? And I said, I'm not worried about the news. My stop loss is going to take care of me. If the trade goes the wrong way, oh, well. It's not the end of the world. I have to lose trades. Regardless of my winning percentage, there's a losing percentage. And if price hits my stop loss, I take it on the chin, hold my head up high, and I go on to the next day. And I can do that because I'm risking properly. Other people can't do that and fathom the loss because their risk management is piss poor. That's why they're like, my stop loss is hit. Or they took a signal by somebody. You know, let's say they took a signal. And it hits stop loss. And they're sweating bullets because they risked too much on that one trade. They bid off too much that they can chew. See the CPI numbers come out around 10. And you'll see earlier, if you're in the chat, I took that gold sell setup. And it dropped. It tanked. But where did I find my setup? Above the opening price. Let's say here. Because gold opens up an hour later. So you can see how it's 18 instead of 17. See how it's Friday? 18. A lot of people ask me, what's the opening price for gold? There you go. You have it there. 18. The opening price. This is Sunday's opening price. SOP. SOP. Somewhere along the lines here, there's a setup for me. And I took a fair value gap and went short from that high. The easiest way to do this. Now we go back to the 1 minute. Multiple fair value gaps. One here, one here, one here, and this one is even the shift too. This is the one that everybody likes to look for. It's right there. But it's on the 1 minute time frame though. And when is that occurring? It's occurring after taking out previous daily high or last week's high. So if you look back, just for reference, because some people may be lost. What are we doing? We're taking out old highs. Price is coming up, taking out Friday's high. It took out last week's high. You see that? Not last week's highest high, but it took out a high in last week's range. It takes out Friday's high. It even takes out Thursday's high. So it takes 2 days ago's high. Thursday's high and Friday's high. What is it doing here on the lower time frame? Getting set up for a sell scenario. Being in a premium above Sunday's opening price. And you'll see, there goes the market shift. Fair value gap. Running through a swing low. Price then breaks down. Selling lower. And then the CPI numbers drop. And I wasn't worried about the CPI numbers because I don't care if even if the news comes out positive or negative, the actual doesn't matter what that number is, guys. Doesn't matter. Price action is going towards whatever liquidity is coming out. The news itself is the excuse for them to push price in huge chunks. They're using the news as a catalyst to move the price action. To what? Clean lows, sell side liquidity, buy side liquidity, whatever it is. They're using the news to get that price action moving faster. One candle, larger than all the candles throughout the rest of the day here for Monday. That one candle itself is larger, 10 a.m., larger than any other candle printed for Monday. I wonder why. Can't be for no reason. It's an excuse. You really think they're sitting here worrying about the PMI numbers? No, they're not. They're worrying about where the sell side is. Below these clean lows, these double bottoms. All the retail support and resistance quickly runs through that. And it melts. Gold melts, honestly. Gold melts after this. And that was a great setup there. But it doesn't change no matter what I'm looking at. All these ideas are the same. I just want to do something for Jules. Shout out to Jules for this. But this is UCAD. And I'll walk you guys through it step by step. So it's no different. I want to be super transparent. It's not something that I'm trying to gatekeep or Deontay knows some special sauce. I don't know no special sauce, guys. Yeah, I went through mentorship. Doesn't mean anything. Woohoo. Doesn't mean anything. It's not a badge of honor or anything. Oh, you used to trade in No, it doesn't matter if I went mentorship or not. These ideas would have been taught to me regardless on ICT's free YouTube channel. Doesn't matter. This is the old IPTA too. I'd even remove this. We could see how it's still using these old IPTA levels. But Deontay uses the static one. I move my IPTA. So I would remove this clean. Now watch how context gets played into this. No indicators, just price action. And time points. When you look at this chart naked, it doesn't mean too much. Now, until I start painting things onto the chart. I come here to May 1st. I look back 20 days. 20 bars. Do the same thing. 40. Do another 60. So I'm going back 60 now. After this, I'll check the chat to see if there's any questions. Then I cast forward 20 days. Doesn't matter. 20. Here. At this point, what do I do? Look at my macros. I'm looking at UCAD, right? I'm looking at UCAD. So what do I have to look at? Canadian dollar. Simple macro analogy. Just looking at the seasonal chart. Because we could go in depth with that. But I'm just looking at the seasonal chart. Just to see what's going on with it. So I go and look for CAD. So let's come down here. Look for CAD. We're looking for just straight CAD. I don't want CAD into something else. Oops. Should have never done that. I'm not sure why I'm not getting straight Canadian dollar. Shouldn't be no difference to this, honestly. I just want to be sure though, because this is not how I do it. This is not CAD. It's saying CAD to dollar. It should be inversed anyways. However, we can see May, it's going up. So it's not preferred. I don't want to see CAD going up if dollar's also going up for its seasonal chart here. They should be going inversely directions for the month. This is how you also find mega trades. You find a currency pair that's really beat up, one that's really strong. You put it together, and then you'll see price action unfold. But overall, I'd rather see UCAD going down. You can see UCAD for the seasonal, it's going up for May. At that point, I look at the daily time frame and I find my highest high and lowest low in each one of the quadrants. So I have to find the 20-day high, the 20-day low. That's it. Now I could go back further, but I'm not gonna waste time. Your time is really valuable to me. At this point, I have buy side and sell side. So we're already working in a range. So if you were to take this range, high to low, already working in range. This premium, this is discount. We're clearly in a discount because we're also below the monthly opening price. That's the opening price for May. We're below it, so we're in a discount for the month. We're also below fair value of this range, this swing high to this swing low. That's how you find the range. You just take a swing high and swing low, and if prices in between that range, that's what you're going to normally measure. You cut that range in half. That's 466. There we go. 46. That's equilibrium. You can see now we're in a discount for the range, which also lines up with what? Some type of optimal trade entry ideology as well. So you can see price comes down below 50%, hits 62, 79, and 70.5, the real sweet spot, I guess, people would call the middle. But the whole range in between 62 down to 79, that's your most ideal buy setup. Yes, there are times when it comes lower. Don't mind the 88.60. I honestly don't even have to I don't have to have this on, because some people are going to ask me questions about that. 62 to 79% is ideally what everyone has learned from ICT, optimal trade entry. There should be some type of buy setup unfolding here. So you can see it's purging the previous daily low. I would like to see, personally, I would like to see the next candle open and it doesn't break this low here. It continues now to run higher. We get some type of swing low and price finally gets back up higher, being cheap for May. That's what I would speculate. Running into some type of PD array. You can see here on the daily, we have a fair value gap. Take this off so we can see it. There goes the fair value gap that is ran with speed. That's the swing high that it breaks. That's the market structure shift here. Speed, price is trading down into it. Yes, doesn't fully respect it all the time. Some people want to see it clean, price come down, hit UCAT, and then it reacts higher. There are times where it runs a little lower, and then it turns right back around. But in the down close candles, 1, 2, and 3, odds are, if the market is truly bullish, they've been buying way before everybody has ever expected. They've been buying since here, since Wednesday, May 3rd. They've most likely probably been buying here for the month. If we're just talking about this data to this data, they've already been buying 1, 2, 3 days worth of buying. They're probably hedging into the market here. The market is going down, but guaranteed, I know they're probably buying. And if it turns around, that means this is all just counter trend candles, 1, 2, and 3. And what do I mean by a counter trend candle? If the month itself is going up, that means the down days is where they're getting their opportunities to go long. You could see here for, let's say, February. This is February going into March. We'll mark out March so we can see that as well. So many ideas I could really walk people through. This is blue. And make this blue here too. Just looking at this blue range here, this blue line to this blue line, that's February. Look at all the down close candles, daily down close candles, and what happens after it. Buying. And also, the swing low is forming. This is another pair that we're looking at. It's UCAD. Look at where the swing low is forming, below the opening price. That's probably the biggest gem in this whole video tonight. The swing low for the month is happening below the opening price. And it goes bullish or goes long after sweeping sell side and getting the foolish retail traders to go short. That's what they did there. They got everybody to say, give me your money and I'll take that and sponsor my buys. Thank you. I appreciate that much. And that's how you guys have to play the market as well. When I hear people send me chats and stuff, oh, I think UCAD's going to go short. And then I look at the market and I look at it like this. I'm like, you're going short in a discount? So you're telling me you would rather go short below this line? Why? Why would any business person want to go short here? Why? It's not worth it. It's worth going short up here, above. And you can see there was once an opportunity to go short right there. 1, 2. Go short. But when you're below here, it's most likely ideal to look for the buy scenario underneath the line because it's cheaper. You want to buy it back cheap. Doesn't matter the time frame. Doesn't matter the session. Doesn't matter the day, the weekly, the monthly, the yearly. It's the same thing that unfolds. If we were to take this idea on another level, it's the most fractal idea that I really love this idea because it really teaches people why the opening price is so important. Let's take, for instance, 2013. This one candle represents 2013. Look at how it forms. Look at the life cycle. It's born here and it deceases here. So it born and dies here because that's the close and that's the open. At one point in time, it opens here and it drops below the opening price. I wonder why. Because it's cheap. And after making the low of the year, it ran all the way back up past the open, made a high, and closed off. It's the same thing here. And I guarantee you, if we were to go back to this year, there is some type of higher time frame swing low. And I bet it's a monthly swing low. I would bet the farm on this. I would bet everything I own that this, at one point in time, there was a swing low on the weekly or the monthly chart that formed below this candle. So if we were to bring this back, bring it back here, and we go on the weekly chart, it was 2013, right? Whole range 2013, 2012, 2013 here. That's the whole year. January to December. This is the opening price here for the year. That's 2013's opening price. Opening price. Where's the swing low forming? Below the opening price. It's right there. It happens January, for this example at least, January was the low of the year for UCAD. UCAD was bullish overall. You can see for the rest of the year, it was up close candle for the yearly chart. But where's the swing low forming? Right below the yearly opening price in a discount. How much more fractal can the idea be? It just keeps going. From the largest time frame all the way down to the smallest time frame. It's the same thing. And this is the weekly chart that I'm showing this on. Swing low formation here. It creates a false break. It runs this low. See how price runs this swing low on the left side of the chart? Look how it runs that swing low, and immediately after running that swing low, it runs back to a swing high. That's how I catch my false breaks. Because if it's truly going to go bearish after breaking this swing low, because I equate breaking a swing low to being bearish momentum. If it's going to be bearish momentum, I need to see a lower swing high formation. Come up, come down, up, lower. It needs to be a lower swing high. Doesn't give me that here. Instead, it breaks the swing high. That's what happens instead. Goes like this, comes up and breaks it. And then it creates the higher swing low. You see how that's the false break here. That's the false break. Instead of it going up, down, breaking that low point here. That's the low point that it breaks. And going like that. It doesn't do that here. See how different that is? That's your false break. You're watching it. You're seeing it right there. In hindsight, at least. Oh, Juice. Hey, Juice, you have a question?
Yeah, so when you said breaking the low point on this chart particular
Yeah.
weekly open, do you mean like, are you looking for candle closes below the previous swing low?
No. Doesn't matter. I'm not looking for the candle to close. I'm literally just waiting for the candle to purge that line. So it's like in American football, the rule is once the football breaks the plane of line, it's a touchdown or it's a goal. That's the same idea that I have here. So once it breaks that low, it doesn't have to close below the low. Once it breaks the low, the idea and the mindset here at this point, the mindset. So if you were to bring it back and watch this live, the mindset here, I would have told myself, if I was doing myself on a weekly chart, I would say, oh, it broke a weekly swing low. Only two things can form here, Jules. There's not a third option. You only have two things that can happen. Either it is a false break or you just caught the trend. It's either two. It's a flip of a coin. You're either going to catch the bottom, this being a false break and it going higher, or you've caught a new trend. Price breaks the swing low, creates a lower swing high formation. But you can see here, instead of it giving us the lower swing high formation, it does what instead? Breaks the swing high. So it makes me think already have 20/20 vision to get ahead of the curve. I need to be buying on a down week or a down day. Sometime next week, I need to be buying or below the weekly opening price after getting back to the swing high. But let's say I want to take it a step further and I'm not as confident or sure about it going higher. What do I have to wait for to form now? A higher swing low. So this swing low here, and we'll get rid of that one. We just need to see a higher swing low formation form. And it's right there. Look at the higher swing low. Here.
Got it.
It's right there. As soon as you see that.
I'm still thinking like you buy under the monthly open. Is that
That's a very good case scenario. So basically what I'm saying is buying below the opening price, if you're bullish, very ideal to you as the trader. It's very cheap. And you'll see it time and time again, month after month. Look at all your bullish months and backtest it and look at it and physically look at where the candles are forming for that bullish month. It's dipping down below the open and then running up with speed. Look at all the months that are down. Look at how it runs above the opening price and then runs down. It does it all the time. And it's a fractal idea on all time frames in all sessions. Now at this point here, if we're following the structure, because in my mind, if price breaks that swing high, let's just take it a step back. There. Price breaks that swing high. In my mind, in Deontay's mind, I'm thinking bullish momentum shift. Especially if it's a market shift with a fair value gap. And I just need to see a higher swing low form. That's it. 1, 2, 3. After this candle here, it's the same idea. That's the third candle here. Same fractal, but just on the weekly chart. That's the third candle's high on the weekly chart. In this swing low formation. If that candle's high is broken, I have a high probability scalping opportunity on this candle's high, the next week's high. Odds are I know I can find a setup going into next week. When it opens, next candle opens, I need to be looking for a buy opportunity to get me to here. Because I know it's most likely going to trend now. It created the higher swing low. It didn't finish forming. There it was. So that candle here. Where did this candle open? It opens here. And actually doesn't give any opportunity here. You can see how it doesn't. The open is literally its low. It doesn't give an opportunity to go low and go long or catch a discount buy. But you can see how price action after this third candle's high is broken, I have much more confidence going into the marketplace saying, yo, I need to be buying. So hopefully that makes sense, because that's the same thing I'm showing on the daily time frame. It's just on the weekly instead here.
Yeah, I learned how to swing trade from you. I'm not gonna lie, you really helped me out a lot. But I started to notice the same patterns you're talking about.
Man, that's nice.
Especially on like the monthly.
Yeah.
Like, it does the Judas swing. And
yeah. It is. Isn't it almost amazing to see that though? Right?
Yeah, it's really clicked, and it's funny that you're mentioning the yearly chart.
Yeah.
I recently applied it on that, and
Yeah.
It's crazy.
It's honestly crazy. It's astonishing when you see how fractal the market is. Doesn't matter the time frame because everyone's wondering, oh, Deonta, are you looking at the 4 hour? No, I'm not. Personally, I'm not. But could I see the same ideas forming on the 4 hour? Absolutely. Let's just take this analogy and just go to the forbidden time frame that I never use. I never used the 4 hour, but I know that the same ideas can apply. Now, I'm not trying to sit here and cherry pick an idea here, but we could see in hindsight this price action is bullish. We could see in the last couple hours, last couple days, Thursday to Wednesday, it's bullish. Let's just break down this leg here. How did price get here? How did we get up here? Well, let's look back at where it came from. What happened here to get price? Oops, sorry. What happened here to get price up here? Something had to happen here. Now I know I'm not a genius or anything, but I know logically thinking, if the market is fractal and it's going higher, it had to make a higher swing low, and at one point in time, there was a market structure shift. And we can all clearly see it here on the chart. Even if we were to look at this one here, I'm not going to start with this one, but I'm going to take a look at this one here. Market shift is occurring right here. There's a fair value gap. And like I said earlier, you're either going to be in a false break or you're going to be catching the new trend. Look how price breaks this swing low here, Lewis, right? Look how, boom, price runs down. Breaks that swing low. But does it give us a lower swing high formation? No, it doesn't. It does completely opposite instead of following the bearish momentum shift, quote unquote, of being at alert. Let's say we were alerted. We were like, it broke this swing low. Money sign. We don't need the money sign. It's doing that. TradingView is doing that weird glitch. I have to always change the symbol to change it to the one I want. It breaks this swing low, and it puts us on alert for saying, oh, we need to see a lower swing high to form. But it doesn't necessarily do that. It runs back up and takes out the swing high. Then my mind goes back into, oh, okay, this then was probably just a false break. This is the run on sell stops because we're going back to the high. And this technically would be what? Most likely price running back up and coming down into a breaker. Because what's the formation? It's purging and then reverting, coming back down into the range. We need to see now a higher swing low form. And ideally, we would want it to form inside this fair value gap here. And we have another one on top of it as well. Here and here. So I would ideally, if I was looking at this, I would want it to come back down into this, go long. But we don't get that here. You can't get everything that you wish for. But we see that there is a higher swing low formation forming though. Here. The same principle, the same idea as fractal. They do another higher swing low. That third candle here, its high is broken. By this candle's high. You could look to go long after that. And you can see the same thing repeats again. What happens here? Speed through another swing high, and it continues to repeat over and over and over again. Here's the speed again. It took time though because it's a 4-hour chart. You got to be patient. But when is this setup most likely forming? I already know it's probably forming inside one of the kill zones. I don't have to go in the lower time frame to know that. I know that the market is most likely very popping during the New York session, the London session, or the Asian session. It's not exciting outside of the sessions. Any of these sessions, I say this time and time again, if you look at the chart, any of the areas that are not highlighted on my chart, it's boring. And I wouldn't trade it. Anywhere on this chart where it's not highlighted with the session indicator, price action is boring. And you're most likely going to face consolidation or deep retracement. Look at all the unhighlighted areas. Most likely consolidation. Consolidation. Yeah, you get those moments where it trends. I'd rather skip that. If I have the opportunity to skip it, I'm skipping it every day. Every single day. That's what you see here for the Asian session model. It's the same idea. This is actually highlighting one of the sessions, one of the unhighlighted areas. This is the New York dead zone or the New York lunch. All the red highlighted areas, all consolidation. Look at that. Price is just sideways. And I'm using that then to go into the Asian session. That's all I'm doing. I'm avoiding the market at certain times, and I'm getting in the market during certain times. I'm getting into the market during these green sessions here. That's Asian session here. I'm not trading when the market is dead or in consolidation. And we're going to talk about the London session as well, because some people were talking about, I want to see the London open model. And I'll show you guys the same idea. It's not no different from the other thing. And I'm going to check the chat. With marking off the swing highs, bro, so yes, in the ES, using ES at this Zoom session. Oh, no problem. I got you. We'll look at the minis too. When marking off the swing highs and swing lows, according to the Asian session model, I know you mark off from the 15-minute time frame. Can you go lower? Absolutely, Jeremiah. You can go lower. You can. You definitely can. So instead of starting off with the 15-minute time frame, you could start off with the 5-minute, mark off all of the swing highs and swing lows, and then break it back down to the 1 minute as well. I just happen to find the 15-minute as a feasible time frame to find my obvious indicators of buy side and sell side. The indicator is this one here. FXN Asian session range.
Thank you.
No problem. Absolutely. I'm gonna do a separate video just showing the settings. Another time. And we can see red zones most likely consolidative. And if it's going to give me if I have the chance to flip a coin, like I want you guys to think about this. If you have the chance to flip a coin and one side of the coin had consolidation and the other side said expansion, or reversal, would you take that coin? No. I'm not taking that coin because the odds don't favor me at all. I'm not flipping that coin. But if I had to flip the coin and the odds were expansion or retracement, oh, I'll take it. I'll take it. And that's what most likely happens in the London session or the New York session. That's why I'm taking those sessions. I'm not taking the chance during these red sessions because that's the dead zone. It doesn't benefit you. A lot of people want to trade late for the FX currencies. I'm like, don't trade late PM sessions, guys. If you trade after 12 p.m., you're chasing price. That's how I see it. Anything after 12 p.m., I think you're chasing price. Unless you're a position trader, unless you're a swing trader, and you're holding a position, you can do that. But if you're an intraday trader or a scalper, and you're trading during these red highlighted areas, I think you should consider another session. And I think you'll see it increase dramatically in your trades. I personally think so. Disclaimer, I'm not a professional. I don't want anybody suing me or anything like that. But, hey, Jules.
Sorry, I normally only trade the New York session, but when you say only trade the this is the New York session, these highlighted areas.
So I'll show you. So these red highlighted areas is 12 p.m. So if I take this here, 12 to 8 p.m. New York. This is the PM session. So this is 12 p.m. to 8 p.m. All the red highlighted areas, and this may clarify because someone else may have questions too. That's a great question. This is 12 p.m. to 8 p.m. That's why it looks completely different here. So here, I would look at my chart. That red highlighted area on the other chart is here. The one that's not highlighted here. See, this is 12 here where my mouse is. And all the way up to the green, that's 8 p.m. See how it's consolidating? See here, previous day 2, 12 to 8 p.m. That's late p.m. session. Or I call it the New York dead zone. Don't trade here. And you can see in this example for this current week, doesn't matter what week it is, you can see it's consolidating. Look at Monday, consolidating, all the way to Asian. Same thing here, Tuesday, consolidating. Same thing here, Wednesday, consolidating. It's not ideal to trade in those sessions. It's most likely ideal to trade New York AM session, London AM session, London close AM session, and Asian late PM session. That's the only time I'm trading. I personally don't trade London anymore. I stopped it because I live in New York. And it's too late. I honestly, like, seriously, you're laughing, but I'm so serious. I had to change my lifestyle and my sleep cycle to trade London. I had to stay up much more later than everybody else in my household. And it just bothered me, you know? And I think health is way more important.
Say that because I gave up Asian. I just don't maybe because you trade the U.S., the JPY, and you know those
Oh, the New York session
those
setup.
other pairs. Yeah. No, like the Asian.
Oh yeah,
I
yeah,
guess
yeah,
it's because you trade like the USD JPY and
yeah. The
the
yen pairs.
Aussie.
Yeah, absolutely. Yeah, that's why I mainly trade the Aussie pairs. But if I was trading UCAD, I would clearly not trade Asian for this. I would trade New York instead. New York and London close potentially. Like if I were trading any of the majors or the minors, so if I was trading UCAD, U Swissy, um, Aussie versus dollar, pound versus dollar, CAD versus dollar, whatever it is, I would be mainly trading New York session and London close. I can't do London open because it's too late and I want to sleep. I value my sleep over any other dollar bill. I don't think it's worth my while to spend the next couple hours, 2, 4, 3, 5 a.m., trying to hunt a setup here. I could just wait for New York setup and then find a setup. If I don't find one here, I could trade. I could find a small scalp opportunity in London close. And then after London close, you're done. You're done trading. Stop trading. Other people are going to sit here and argue and say, oh no, you could still find setups during the New York dead zone. They are not wrong. But the fact that there is a risk or chance that I will be caught in consolidation allows me to say, it's not for me. It's not for me. I could leave it completely alone. But other people, what are they going to do? They're going to force setups. They're going to go against their trading plan. They know they should be trading during London, New York, and London close. But since they don't make no profit in these sessions here, what are they trying to do? They're trying to make profit in this session here. And odds are they're chasing price. And they're forcing setups. I've seen it happen multiple times. People will directly PM me, send me a setup, and say, yo, what do you think about this? And I see the time that they're sending me the setup. And I'm like, oh, it's 12 p.m. I think the setup is not ideal. 2 hours later, they come back and saying, dang, man, my stop loss was hit. I'd be like, yeah, because you're trading in consolidation. It's going to seek and destroy everything here. Or if it doesn't seek and destroy you, you're going to psych your own self out of your own trade. Psychologically, you're going to psych yourself out your own trade because you don't see the market moving. You just see this back and forth. And you're sitting there for hours. And you know you got a life. Most people do. You got other things to tend to. You got a dog, you got a cat, you got house chores, you got a spouse, wife, children, you got school, you got something else going on. What, are you going to sit here in front of your computer for the next 4 hours of your life, for your day, and not getting anything done? No. You go, you skip this completely. You didn't make no profit today. Tomorrow's a new day. That's how I like to do it all the time. Throw in the white flag, wave the white flag. I took a loss. I'm done. But everybody's trying to be a millionaire in one night. Everyone's trying to be a prop firm trader in 2 days. They give you 10 minimum trading days for a reason. They give you 30 days max. But in 2 days, you're spending your hard-earned money. I'm telling you, week after week, people text me, oh, I just got my prop firm account. I'm like, great. Safe trading. I tell everybody that every single time. I don't care who it is. No matter if you're a rookie or if you're a veteran, you've been trading for 10 years, I tell everybody safe trading. Some people feel offended sometimes when I tell them that. And I mean them the best. I want you to be safe trading because I know it's time that you're putting into this market. Where are you getting this money from to buy all these prop firm accounts? You probably got a job or you got some hustle or something, but it's your time that you're trading for the money, for the account. And if you're blowing the account in 2 days, what's the point in even buying the prop firm challenge account? Just for you to blow it every single time? Waste of time, guys. Take it much more serious. You take a loser here, call it a day, call it quits. You lost 1% of your account because you risked properly. Cool, I took 1% loss here. Tomorrow's a new day. You could gain 3% the next day. You don't know that. And if you don't gain 3%, you probably gain a 0.5% back. And then the next day you gain another 0.5. Now you mitigated the loss here, the -1. And now you can start leveraging again. And now you could probably risk 2%. And then you could get on a winning streak. And then you control. It just, man. It's domino effect, man. It's a domino effect. And I really want to preach this through because it means a lot to me. And it means a lot to me to know that other people are literally understanding the market through my words and that they're seeing results. It's happy when I see people come in the channel and tell me, yo, I just passed a prop firm challenge taking your advice. I'm like, yo, I'm glad it worked out. Keep going, king. Keep going, queen. Keep doing your thing. I want you guys to be successful. I don't want you guys out here wasting your time. Coming to someone's channel and not learning anything, waste of time. If I was a viewer of my own, market, of my own channel, and I saw no progress in my trading, I would unsubscribe. Instantly. I don't need someone not why am I subscribing to somebody that's not teaching me anything? No point. Just want to check the chat. I'm talking a lot. I appreciate all you guys. Oh look, yeah, no problem. No problem,
I'm not
man.
even trying to hog this, but like one last question.
Nah, do your thing, man.
So like,
yeah.
for Asian session, utilizing like the macros, like the 30-minute cycles or 90-minute cycles.
Okay.
Like, what is the most optimal period to trade for the Asian session?
So I'll tell you this. That's a great question.
AUD, right?
So all the yen pairs. Great question. Ideally, when I'm looking for now, I know there's the 90-minute cycle, and there's other cycles. There's so many other cycles, so many things to this that we truly may not know. I do know that when it comes to the Asian session setup, ideally I'm done trading by 9:30. Normally my entry is very early into the session. I know, like, let's for instance, if you were to break this up into cycles, and I think I have it here, unless I changed it. Yeah, I still have it. Yep. Go down to the 1 minute. Yes, it's 30. Yeah. 30 minute. 21. No, this is 60. This is a 60-minute cycle. Normally the setup is forming along the lines in here from 8 to 9:30. That's normally where I find my setup personally on any of the Asian session model setups. Sometimes it's a little later, but most of the times it's very early. From 8 to 9:30, that's my window that I'm really looking to trade. Once it starts getting into like 10:30, 11 p.m., I'm not trading Asian. Normally the setup is really early. Like, for example, because I know there was a setup on, was it Thursday? Let's go in the 15-minute time frame. No, it wasn't Thursday. It was UJ. Here it is. It's a small setup. This setup is very small. If we had to start it over, it's the same thing. Here to here. We can see price clearly sweeps this swing low on the 15-minute time frame. Right here. 1, 2, 3. Sweeps it. This is the setup I sent you guys. Sweeps that. And it gives me a calm 20 pips on a Wednesday. That's the swing low here. It is also below 8 p.m.'s opening price. That's 8 p.m. Here. This black candle here, that's 8 p.m. We'll leave that red. And we'll turn this blue to show the swing low. We can see that 15-minute swing low is broken. You go down to the 1 minute time frame, just looking for the first fair value gap to form. That's where I'm going long. Now, for that person, there was someone that asked something about stop loss. I'm going to show you right now. Because most of my stop losses are all the same size, especially if it's intraday. If I'm taking any intraday setup, my stop loss is generally 15 to 35 pips. That's normally what I'm working with. I don't normally have a stop loss of 40 pips, 50, 60, 80 pips, unless it's a swing setup. It's been a while since I found a great swing setup. It's normally intraday, 15 minimum to 35 max. That's normally what I'm looking at. I don't do anything 40 pips. I just think it's too much risk. 15 to 35, that's all I'm looking for. We can see here, if we were to go long off of this fair value gap after sweeping that swing low, going at the top of it, price doesn't even come down close to 15. Yeah, some drawdown for sure. But that's 15 pips from the entry at the top of that fair value gap right there. That's 15 pips. Am I worried about anything? No. Because I know I'm risking either 1% or 2% of my equity within this one trade, within this range from 15 pips down. Or it's ideally less than 1% or less than 2%. And I could live with that. Because if it runs to stop, I know tomorrow I can gain back a 0.5%. I could gain back another 0.5% any other day. And you can see how price trades right up and gives you 20 pips. From here, perfectly, 20 pips. Perfect. It's literally insane to see it. Literally perfectly gives you 20 pips. And then breaks down. And what does it also hit? It also hits that 15-minute swing high. So if you were looking at this for the sell setup instead, which I probably would not have been, I would have been done trading. I'm not a greedy trader. I'm in, I'm out. That's the swing high here. That's broken. Go back to the 1 minute time frame. You can see it's there. Where's the first fair value gap that forms after taking out that 15-minute swing high? This is the opening price for Asian. Change it to black. That's the 15-minute swing high. Where's the very first fair value gap that forms? It's up here. And this is the very first one. Do I get the entry on that? No, I don't. I would have missed the entry for the sell setup. Is there another fair value gap that does form? Yeah, there is. There's another one here. And where is that one forming? Literally on the line. It's so funny when you see it. This PD array is forming on the line of 8 p.m. And it's mainly a bulk of it. It's in a premium. You press play. You speed it up a bit. That's how simple the setups come. It's no overthinking it. Let's say we got the very top of this, max potential profit, 10. I don't know if it goes, I think it goes lower. I think it sells off. It goes lower and gives you more than 10. It gives you, I think it gives you like London, yeah, it gives you more than 10. It gives you more than 15. Basically almost 15 pips. Off of that one simple idea. But when is this occurring? Asian session. It's not a dead period. It's prone to do something. It's not. Now, many people would argue and say, oh, it consolidates during Asian session. They're not wrong about that either. The Asian session in itself has the characteristic of consolidating. But when I'm pairing it with the yen cross pairs, I'm most likely able to get those squeezes or those runs of 20, 30 pips, a larger Asian session. And you'll see, this is the Wednesday. Thursday, the setup didn't play out as well. So hopefully that answers two questions, I believe. Risk management on my TP and stop loss, mainly. It's normally 15 pips minimum. I'm not doing anything smaller than 10 pips, 5 pips, because I know the market can run that. I don't think it's a flex when people I have a 1 pip stop loss. That's a joke to me. I don't take people like that serious. I have a 2 pip stop loss. The market can run a high easily. Easily. Let's say you caught this turning point here. Look how quick price wicks up into this. A quick 5 pip run up above this high. Above these highs. Would have stopped you out. But I have more what? Cushion. 15 pip SL. I'm good. I don't mind this spike up. I could take that. And then price continues trending lower. People cut their losses or cut their winnings very short because they have a very minimal and unrealistic stop loss. You have a 5 pip SL? What is that? The market runs algorithmically above highs and lows by 15 pips. Or in 5 pip increments, if you had to place it like that. I would say a high is ran in a 5 pip increment. So maybe 5 pips, 10, 15, 20, 25, 30. Those are how the market runs the highs. And that's how I would normally gauge it. And it doesn't matter what pair I'm looking at. Now I'm going to show you guys the London opening session. Check the chat. Okay, I already answered that. Is there any other questions? Same here, bro. So, the ES. Yes, no problem. So let's get into ES. The minis. think I had the ES on here. Here we go. ES, most recent one. Clear all this off. So I know ICT in the video. I think he said it starts from 10. You can correct me if I'm wrong, because I don't trade the ES. But I know it's from 10. I think he said the setup starts around 10 to like 12:30. He's looking for the setup. And let's find 10.
It was like 10 to 11.
10 to 11. See, generally that. So it's London close, essentially. Thank you. I appreciate that. So let's say I have to set up the indicator. It's faster to do it that way. When you use the indicator, it's so much more faster to set it up and see it on the chart. So I would simply come here. I'll change this to 10. And then change this to 11. And that should already show me 10 a.m. to 11. Oh, there it is. Yeah, this is... Nope, it's off. 10 to 11. Showing 11 to 12. Why is it doing it? Oh, it's the ES, that's why. It's a little different. Screw the indicator, we don't need it. $10 to 12. This is 10 to 12, right? I'm looking at the ES. This is basically the same idea that I'm looking at for the Asian session model. It's funny because I didn't know about the silver bullet terminology. I was just using the Asian session as like, I didn't, it's technically basically the same thing. You would use the previous session. So let's say we're looking at 10 to 12, right? We're going to use previous data to project what price action is going to do. So we're going to look for obvious areas of buy side and sell side just before 10 a.m. So if we were to go back right before 10 a.m. starts, right here, and we were to mark out the chart, to here. All right, this is where you're supposed to find your theoretical ICT silver bullet model, and this is the S&P minis, as you can see here. Relatively, we're going to say this is a high point just before 10. We don't know if it's going to be a swing high formation, but we could assume that it could be, depending on what the next 15-minute candle does. So we're going to mark that off as a high. So what's above this high, guys? It's pretty clear. It's buy side liquidity. Nothing fancy here, guys. What's below this swing low? Sell side liquidity. So we're going to mark that off as well. What else do we have just prior? We have this swing low too. So we could say these are the two areas that we're really mainly looking at for a setup. Now it's just for... Now, yes, some people say, oh, he's going to run 5 handles or put on 5 handles and do that. Yeah, you could be. But if you're risking 1%, you don't have the margins or you don't have the equity or the leverage to do that, you risk small. You compound your account and you grow it. Wait for one side to be broken. Let's say we're using 10 a.m. as a session, which is basically London close. That's the opening price for London close. We're going to call it London close. That's 10 a.m. opening price. Look what happens. Price opens. And you can see it doesn't take out the high here. Now it creates a swing high formation because the next candle, 15-minute candle, closes and leaves this up and breaks the low. So it makes this a swing high formation. We play price forward. Boom. Right there. That's when the gears start taking. You're like, whoa, there's a setup here probably. You're on alert now. You're on alert. You're on alert. What can price now target at this point after taking out the sell side? The most obvious point here. And I just happened to pick a random day. But I know the setup most likely is going to form. Here. Now I want to see price get back up to this, run this high. Scale down to the 1 minute time frame and see what's going on. So we can see we're below 10 a.m. opening price. We're in a discount. We're in a discount market. We're cheap. And what do rich people like to do? They like to buy stuff and be cheap. Be cheap. They have all that money. They still want to try and save money. At least the wealthy ones do. They don't buy fashy designer stuff. They don't buy none of that stuff that people are very materialistic about. They're very cheap. Simple, basic t-shirt. They're not looking for no Gucci $1,000 t-shirt to wear, flex to their homies. They're not doing that. Discount. They're buying cheap. Price takes out the swing low here and here. So we're on alert. For what? A fingerprint or some type of footprint that the algorithm is most likely going to leave in the discounted portion of the session or the range. So play price forward. And we're just going to wait for the first PDA ray that we can see. You can see one right here. We got a fair value gap here. We also have this swing high here that's about to be purged after taking out swing lows. Press play. Price does what? Taps right into it. Wow. The same thing as the Asian session model. No different. It's just I just happened to bring it to light to see that the model forms in almost every single session. The ICT Silver Bullet forms in London, New York, and Asian. And now more traders are just going to get used to seeing it happen much more often. Telling you, the future generation of traders are going to be amazing. They're going to be so amazing, I'm telling you. The information that's out there is just astounding. So it happens a little later after. You can see off that first fair value gap with a nice stop loss, you eventually get where? Back to that swing high. Something clearly occurred there. Some type of news. But look how price gets back to that swing high. That's the idea. And you were happening to buying cheaper of this range. Yes, it didn't respect the PD array 100%. That happens. But that's why you have a stop loss, guys. You're not going to get the exact bottom every single time. But that's why you have a stop loss. You'll place a stop loss 10, 15 pips from your entry. And you'll hold. And you let your stop loss do what it has to do. But if you feel like your stop loss is going to get targeted and you're that psyched out, then just collapse the trade instead of taking the full 1% loss. Collapse the trade. And sometimes that might save you. You cut your losers early. It may be actually going to run 15 pips to the downside. And you may happen to have that gut feeling and saying, I think it's time to get out. And you close. And I had many moments like that trading. I close a position, I'm like, it's going to fail. And I close it and I come back a couple minutes later. And sure enough, the price is where my stop loss would have been. And I was very happy and glad I got out earlier before I hit my stop loss. But that's something, that's more intuition. That may not happen reluctantly for a lot of people. But I know there are others in the trading community, in the Forex community, that has that same feeling. They feel that price is going to hit their stop loss. So, they tell themselves, let me get out the trade early. Let's call it another day. I think the setup may not form out. There's something about it. It's just not the way I want it to be. They get out and they realize it saves them a lot of pain. Especially if they're risking in proper. Cut the losses really early. If they're risking 5%, they take a full stop loss. Your trading career is going to be very short, my friend. And that's the idea there. So you're going from this all the way up here. You don't get the profit until later into the next day, which is okay. But you can see how it continues to trend. All it does, it keeps taking out swing lows and causing false breaks. And it keeps running higher. So you have a seller's remorse. So every time the price action goes down, the retail traders are probably very happy. But then it goes up. And then this is where they try to sell again. I'm kid you not. This is probably where retail is probably going to sell again. And instead, it goes up again. And they keep fighting this cycle of, oh no, it's going to go lower. Oh no, it's going to go lower. Oh no, it's going to go lower. But by the time it actually goes lower, they've blown their account. And they've taken over numerous trades throughout the day. because they're too optimistic and they don't understand what's going on the higher time frame. They're probably reading this on the 1 minute and thinking, I'm reading this on the 1 minute time frame and I can project the next 5 hours. No, you're not going to project the next 5 hours based off of a 1 minute idea. You're not. It has to start from a higher time frame perspective first. Then you drop down to the lower time frame. Then you could speculate what's going to happen in the next 3 days, the next hour, the next 30 minutes, the next 4 hours. Then you could do that. If you're starting off on the 1 minute time frame, you're going to get 1 minute results. It's just that simple. That's how I see it. So hopefully this answers the questions to someone's ES example looking for the ICT silver bullet model. That's basically it. 15-minute swing low, purged, running back up here. So hopefully that's not too confusing. It's pretty straightforward. It's exactly what I show with the Asian session episodes that I've been posting recently. And hey, I don't know how far that's going to go, but I know for sure we're going to be on episode like 2000. And I'm going to be showing the same setup years from now. I'm going to be on this channel 2 years from now showing the same exact setup. And people are going to still be asking me, how do you find the setup when I've showed them multiple times? 15-minute swing high broken, wait for a fair value gap to go down. Now let's take a look at another example. Let's just, for gigs for now. It's 9:25. Let's just find another 10 a.m. Let's say 10. Find 10 a.m. Wow. This is 10 a.m. to 12. Definitely was news. Here. I'm on a 15-minute time frame. Before the 15-minute time frame occurs, let's say we mark off the highest high and lowest low. Now you have context here. You have all this buy side above, and sell side is already basically taken. You can see here, all of it's basically already taken. Buy side isn't taken though. But this is the lowest low that we could see just before going into that session. And this is the highest high here. Play it forward, we can see it runs down quickly. Now I could most likely tell you the setup most likely failed here, because I know if it perfectly didn't give no fair value gaps to the upside, then you're good. Happened pretty late. So we can see price breaks that lowest point here, and then price is going to continue going lower. And do we see any fair value gap going up to the upside after the break? Let's see. We're watching it together. Any fair value gap going up? Nope. Nope. Wow. It actually did it. Nope. Nothing. Nothing. Here. Boom. Now we finally got one. There it is. There goes the very first fair value gap after taking out that low there. Mark it off. It's very small. There's no market structure shift here. It's tiny. I would honestly pass on this one, but it's tiny. But in theory, is it a fair value gap? Yes. Still welly rebalanced here. There's not a huge enough gap here. But let's say ideally this was the one that we're looking at for now. Play price forward. Zoom out. It's playing too fast. I'm gonna see if price. I don't know if price gets back up there, but you're in well profit though. I'll tell you that. You're in some great profit. And it was just it's so simple when you see this. It's like ridiculous almost. Look at, that's the fair value gap here. That's the fair value gap right there. And there's even another one. Yeah, no, that's not one. Yeah, there's another one right here. Here's another fair value gap. Like I said, you're not catching the bottom. Yeah, you're going to be in some drawdown. Sometimes the setup, you get no drawdown on the setup, which is always nice. It's always a good feeling to never go and take a trade and not see red. You know, it's a good feeling, of course. But most people are getting into a trade and they're in drawdown. But you could see the drawdown is very minimal. Fair value gap, price is still within range of that fair value gap. It's not like it dropped 100 pips, 100 ticks, 30 ticks, 50 ticks. See, price is relatively still close to this fair value gap. Likewise, this one here. And ever since then, and it happens after 12, well into profit, guys. No bias, no indicators, no moving, crossing over averages, nothing of that sort, you know. And I don't even know much about indicators, to be honest. I haven't been taught indicators as a trader. I just want to see how much higher does it go if it gets back up to that red high. That high that we had just prior. I don't know if it gets there. I just want to see if it does. I don't think it does. Nope, it didn't. But it definitely gave you some substantial profit. Yep, it breaks down. And we could look at one more example, and then I'll take some Q&As, and then we're gonna talk about some lower time frame tip ideas and finding entries, like during New York. And I also have, oh man, I'm all over the place today, guys. Ooh. London session as well. I apologize earlier for what happened as well. That shouldn't have happened. $10 to $12. We'll play it out just to right before it hits. Boom. Got a low. Work with me today, guys. Thank you. There we go. You got a low. And let's see. Yeah, this is a swing high here. Mark it off. We also have another swing high here. Now this is just before 10 a.m. going into 12 p.m. This is the London close. So if this is the FX market, this would be London close. Normally reversals, intraday reversals normally occur here. We'd watch to see what side of liquidity is broken. We can see price comes down. So at this point, we would be on alert. We would look to see if there's an opportunity to go long to get back to this swing high here or this swing high here. Now, it doesn't have to be the 1 minute, because just because you see me going on the 1 minute doesn't mean you necessarily have to use the 1 minute. It could be a 2 minute, it could be a 3 minute, 4 minute, 5 minute fair value gap that you're looking at. We can see here, look at the first fair value gap that forms here, and this one is very ideal. Why is it ideal here, guys? Because it gives the market shift with the fair value gap. Here, there you go. That's what? A swing high broken. What needs to form after a swing high is broken? Oh, it's too large. We'll just leave it as swing high. Swing high broken. That's a market structure shift. Put the speed through the upside. So I want to see price create a higher swing low formation. So this is the recent swing low. And this is, and it's higher than this one too. So you already kind of have insights or clues that, oh, higher swing low. Are they buying? Why doesn't price want to run this low? Why is it being held up here? And after not running this low, it runs the speed. So you got context clues here. Also with the 15-minute swing low. Also, once again, how do you know if you're in an overbought or oversold condition? You just look at the session that you're in. You normally look at the opening price for that session. If it's not this session, you use the daily opening price or Ipto True Day, which is 12 a.m. Or you use the weekly opening price. Where is this fair value gap forming? Below 10 a.m. London close open. And anything below it is going to be a discounted market. I don't know how many times I've seen this. I've been trading so long, it's just like, wow. You see the things happen over and over again. And as you start backtesting this stuff yourself, you'll see, wow, this stuff really is coded. This fair value gap is physically being formed below 10 a.m. London close open in a discount. An oversold condition. Ideal buy scenario, ideal buy setup right there. That's the ideal buy setup. The fair value gap that breaks the swing high, we should look to see a higher swing low form. See that? Look at the higher swing low. It keeps creating. There. Doesn't want to run the low. Why does it not want to run the low? Because they sponsored the buys, guys. They don't want to run these lows because they sponsored it. And they truly don't want to run it. Look at how our price action is literally telling you it's going to go higher. Higher swing low, higher swing low, higher swing low, higher swing low. And all these higher swing lows are forming normally after breaking a swing high. And it's also doing what? Creating higher swing highs as well. Higher swing high. This one fails to break this one, but then you get the speed through it. Same idea occurring once again right there. It's the same idea. That's the swing high that it's running right through. You got the shift. And where does this fair value gap also form? Below 10 a.m. opening price. This could be another pyramid entry. Right? Price trading back down into potentially the mitigation block. Failing to sweep this swing low right here. Here. And here. That's the two lows. So you have the low here, low point, low point. What's between these two low points? A high point right here. Got the mitigation block right there. So there's so many different ways to look at it. It's just that I like to pick the PD array fair value gap. You could be looking for the mitigation block. Price fails to break this low. Mitigation block is in between the two lows. The highest high between that is here. That's your mitigation block here. The difference between the mitigation and the breaker is the breaker would break this low. It would break the low. It would make the false break, come back into it, then trade, then go higher. That's the difference between the breaker and the mitigation. The mitigation, there's no break. In the breaker, there's the break, which is a false break, essentially. And you can see a price trades into that. And let's see what happens else if price continues to go higher or not. We'll speed it up. And look how price gets, see how price gets right back to fair value? The opening price. After buying cheap. Look how price gets back to the fair value. Comes back to these clean highs. Some short-term target. And it starts breaking down again. I want to see if it gets back to those red highs up there, though. It doesn't. It breaks down. Do we get back up there tomorrow? Ooh, it looks like we did. Yeah. Wow, it's amazing. That's amazing to see. Yeah, I think we were just shy of it. Yeah, just shy of that high. So once again, it even possibly gave you another re-entry, sweeping all these lows. Came back to your original, the very first fair value gap. Still within range of your stop loss. Does it get back up there? Yeah, hoping for it. It would be very satisfying to see if it gets up there. Probably doesn't. And these are old highs, basically. These two highs here are old swing highs. And if the market's going to run it, it's going to run it because it's buy side. And look how it gets there eventually. And that's all based off this one setup, guys. Look how long you could have potentially been holding that. I'm not saying you're going to catch moves like that all the time. But just based off of that one setup on the 1 minute time frame. That's what you would have saw. Look how it comes back to those highs. What are the odds that it comes back to this high? Pretty high, honestly. Because it's buy side liquidity. It's not random. Same here. What is the difference in Sibby and Busy and Silver Bullet? I think I answered that. Yeah. Do you think it could take a bit about the conditions surrounding a marketplace where liquidity graphs false break and failure swings might occur? Or would it be more probable to occur rather? Read that one more time. Do you think you can talk a bit about conditions surrounding a marketplace where liquidity graphs false breaks might occur? Yeah, absolutely. Let's talk about it. So, odds are high probability false breaks for me. So this is how I like to pair it. So London close. So I look at all the sessions. First things first, what session is most ideal for reversals? London close is pretty ideal for that one. If you've studied ICC's material, you'll know that the London close typically is your session that is going to give you a potential reversal to the daily trend. Now, if that's the case, I would look for opportunities where the market's going to run a swing low or swing high, and then I'm going to look to go long or go short, especially if the New York and London session is going up or going down. So if the New York session is going up and London is going up, I would suspect London close to go down for a bit. Same thing vice versa. If the New York session is going down, and the London session is going down, I would suspect London close would give some potential small scalp opportunity going up. Now, looking at this, let's just look at the current week that we have. And we're still looking at UCAD. So funny, we're still looking at UCAD. But looking at UCAD, we could see here, it started the trend of a reversal. This was basically the start of it here, after it got purged again. So there's a false break occurring here at 8 though. But here at London close, 10 to 12 p.m., we have this small retracement here. It is consolidating, still moving sideways, but it's ultimately still coming down into this range here. This low to this high, that swing high to this swing low, it's coming back down into that range briefly. Let's just take a look at that. And like I said, this is London close. Ideally, you're going to get a reversal. Now, does it mean the reversal happens specifically in the session? No. But it may be the triggering point, the turning point, or the topping point, the high of the day. So if it was a bullish day, London close might likely be the high of the day. You can see here, there's a turning point here. Do we run any swing highs, or do we run into any liquidity voids or inefficiencies in price? We do. You see how price tears all the way down, and we're running back into this range, high to low. So we're at a premium again. So if we measure this high to this low, and we cut that range in half, I know we're above equilibrium. I know we all can see that. There is probably going to be a scalp opportunity to go short here. So we go down to the 1 minute. And we can see the London close. Where do we get a fair value gap? That goes down. We get one here. See how price prints the fair value gap? It doesn't respect it cleanly. It doesn't go short. But overall, if you were to have a stop loss, I want to just show you this. Yeah, see, we just got stopped. That's what I said. Sometimes 15 pips, it's an easy run. You can see here, if I was using a 15 pip based off of this idea here, I would have gotten stopped out almost perfectly. And I would have been upset too, because it runs my stop just for it to then go lower and move sideways and trend lower. But overall, you can see multiple times prices breaking swing highs and causing false breaks. False break here. Price comes down, comes up. False break. But after breaking this high, I want to see how is price reacting after breaking swing highs. Is it really dynamically making a swing low, saying, yo, we're going to get out of there and go long again? So once we break this swing high here, this swing high, sorry. This swing high, let's take for instance this. When price breaks this swing high, is it making a swing low and running away with speed? No. It's not. You can see how it breaks that swing high, creates a swing low, and the candles just get small. Nothing. There's no there's no dynamic, oh, let's go higher, make a higher swing low and go higher. No. We get that turning point. And this is the dead zone. This is the session I tell people not to trade in because you're most likely going to be facing a lot of false breaks as well. It looks like it's going to go long, then it doesn't go long, you go short. Looks like it's going to go short, but then it doesn't go short. It's just waiting for the Asian session. It's normally what it's doing. Look at how it's consolidating. And look at how it's confusing the buyers and sellers all inside of this range. They have no real footing to the market. Multiple times, it runs a swing high, then it runs back to a swing low. Runs a swing low, then it runs back to a swing high. It's all because the market is most likely primed to consolidate during this time period. But when it comes to catching the false breaks, generally, I'm just waiting to see if the setup is going to continue falling higher or lower. For example, see how price runs this swing low with speed? There's a shift here with this fair value gap here to here. Swing low broken, swing low broken. I want to see a lower swing high form, which should happen here. So boom, here, here. That third candle and that higher swing low here, 1, 2, 3, it's broken. After it's broken, I gotta see the market kick up and want to start going short at this point after taking out this low here because it's the lower swing high. It should start going short. It doesn't do that. Doesn't give us that turn the corner. All right, let's go. It's time to go. It just stalls. Doesn't do much. And like I said, it's also during the New York dead zone. So there's no point. But all in all, when I'm looking for the false break, I need to see if price is respecting the market structure. Higher swing high or higher swing low. If it's not going to be that, then it's failing. And it's going to make a lower swing high and a lower swing low. Same thing vice versa. That's generally what I'm looking for the false breaks. It's not that there's a specific unique thing to it that makes me say, oh, I only catch false breaks when this occurs. No, I'm actually sitting here watching the price action and taking an educated guess, a speculatory guess on what I think price action is going to do. For example, and we changed it. I know we changed it. We messed it all up. That UJ setup during that night of news. And I have to change the indicator back. 20. At least it's not a bad fix. It's a quick fix. To 0, 0. This is midnight. That's how you get it. This is how you get the indicator to go to midnight. When you put 0 and 0. Like that. That's how you get it to midnight. You turn this on. We should be back. Yes. We are back. Multiple false breaks here on the lower time frame. This day here. And this was a bank holiday. So there was Japanese yen was less likely to be strong. It was a bank. That's how I was looking at it, honestly. Banks in Japan are closed. Great. That means better for the U.S. More dollars are going to most likely be traded with instead of Japanese yen. We got that feasible trade set up. But look at the false breaks. This is what I was referring to. On the 1 minute, look at how many times it keeps sweeping the lows. But after sweeping the lows, what is it doing? What is it physically doing after sweeping the lows? It quickly runs back to a high. Price comes down, right? Creates a low point, runs it, runs back up. Comes up, comes down, runs a low point. Quickly. It doesn't waste any time. Up, down, up. It's breaking swing highs very quickly after breaking swing lows. These are all just false breaks. Given the context of being below the Asian session low and sweeping that 15-minute swing low here. I have the idea and thought process of Yo, don't be psyched out, Deontay. You can hold this. And many people were probably nervous because I posted it live on the channel. And I actually had someone comment and say, wow, yo, like you kind of walked me through that one because I was a little nervous holding the buy setup here. And I was like, there's no need to be nervous because you see this things happen all the time. And even if it were to run 15 pips on me, it's okay. 1% risk. We're not losing sleep over that. And this is the 15 pip SL right here. That would have been 15 pips if it would have knocked me out. And I could live with that, guys. If you can't live with it, that means you have to go back to the drawing board, work on risk management, and work on your psychology on when should I be trading, when should I not be trading. Are you taking 10 setups in one day? Come on. Or are you taking 2 setups in one day? That's pretty ideal. 2 setups a day? You got almost 10 setups throughout the week. If you're trading Monday, Tuesday, Wednesday, Thursday, Friday, and you're taking 2 each day, bro, you're good. You're gonna have a good time. Especially if you're using the ideas and the concepts that either ICT, Larry Williams, any other great traders have taught to the trading community. It's most likely gonna be rewarding to you, especially if you're risking properly. I just keep saying this in New York. Wait for price to run a swing high or swing low. And if the higher time frame has reached an area that it's overbought and hits a previous daily high or runs into a PD array. So let's say you're on the daily chart and you run into a bearish order block. You ran into a bearish order block on the daily chart during the New York session. You don't think there might be a reaction there? Most likely. Same thing vice versa. You ran into a fair value gap or busy during the New York session and it's a weekly busy. At some point in time within that weekly busy during New York session, you could expect a reversal to unfold. But how is the reversal unfolding? After breaking a swing high or swing low. That's what's unfolding. And I think the lab, if I have it up here. Nope. The lab setup shows the New York session. And I really want to bring it whole and talk about the London session. Because that really is what people are looking for. They're just looking for setups that are easy to get in, get out. People don't want to spend hours sitting behind a screen. I hate to say it, but I don't want to be a slave to the chart. That's how I felt almost 3 years ago. I felt like I had to be glued to the screen 24/7. It was the worst feeling ever. I don't like that. I don't like sitting in front of my chart for 3 hours at a time. I have other things I gotta do. I don't have time to sit here for 4 hours watching live price action. I need to be in, I need to be out. Unless it's a swing setup and I'm really trying to cultivate something nice, then I'll do that. Let's take a look here. The New York session is literally showing you, this is DXY too. 15 minute, 15 minute. Is that high? Is that low? Right before the session starts, you see this is a New York reversal, clearly. London starts going down, but New York runs higher. Right here. Just before the next 15-minute candle at 7 a.m., what's the lowest low that we have here? Right here. 7 to 10. That's your low. After this, I promise we're going to talk about London. Price runs it. What am I doing here? I'm on alert. You just ran. Sell side. Instantly, I go 1 minute time frame. Looking for the very first fair value gap that most likely breaks a swing high or is feasible enough. It's large enough. You can see there's one here. One fair value gap. Another fair value gap with a volume imbalance in between it too. Here too, here too. So many ideas telling you that price is going to probably most likely spike. Those are the little key warnings here. Look how the price action is forming here. Speed this up. Put it on 10. I didn't mark off the high, but look how quick it gets back to this session's high. All based off of this. Maybe it would have been some drawdown for sure. It's a DXY. No one's buying and selling DXY. But you would have been in drawdown. Let's say this was UJ. 15 pip SO. Look for price to go higher. 20, 30, 40 pips. And that's basically what I just showed you here is a New York reversal. Because London was clearly going down. But New York does what instead? Takes a turning point and goes up. And that's how you would catch the New York reversal. In simplest ways. I don't like complex ideas. I want things to be as simple as possible. I want to be looking at this market for at least, I can at least mark up the chart for 10 minutes and find a setup. I don't have to sit there now for the next 2 hours wondering if the setup is going to come or not. It's not fun for me personally. It's just not fun. So hopefully that answers your question. No problem, man. Okay, cool. London session. Now we're pushing 10. It's 10:21. Gotta get some rest. Gonna change this. We're gonna keep that, actually. Yeah, we're gonna keep it. We're just gonna hide. No, I gotta keep it. Oh well. If you're still here, thank you for watching. I appreciate your support and your kind words. Everyone's so nice. We need to change this to London session, so we're gonna go 2 to 5, which I probably already had it on there. Yeah, I did. And then we're gonna do Asian session. Yeah, I should have did that. Let's change that back. That's 8 o'clock, and this is midnight. Now I'm just gonna show it. I need to show the box. Take that off. Midnight. I gotta get it midnight. Apologize. It's a little funky to get this. Midnight to 2. This is the dead zone here that you're gonna look at. This is another dead zone that you're about to see right now on the chart. It's gonna show up. That is not correct, guys. What's going on here? There we go. Nice, 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 nice. Welcome to the London session. Now, I want to take a look at gold. I'm going to look at it on gold instead. You could look at it on anything, but I just want to look at it on gold and see how it looks. Yeah, pretty similar. Figured. Here, I could already tell you, we will not get to waste your time. The setup it failed here. Setup idea failed. Idea failed here. Idea feasible. Definitely a feasible setup here. Now let's walk this through. This time period here is midnight to 2. That's what that green highlighted area is. This is not the Asian session. You can use the Asian session, but this is basically taking a dead period. Midnight all the way to 2. Now, some people say, oh, what about 1 a.m.? Because they start their London session at 1 a.m. Then if that's the case, move it back over. Look at midnight to 1 a.m. Here, because I started at 2, I'm going to end it at 2. I'm going to find my swing highs. Draw it out to 5 a.m. Any swing lows. And this is just before the session is going to start. 2 a.m. European Open is 2 a.m. New York Eastern Standard Time. So this is what it would look like. I have my high, I have my low. And I even have a swing high here. You can see it's right there. This is 2 a.m. to 5 a.m. That's the London session here. It's just 2 to 5. This is the London session. And this is midnight to 2 a.m. So this is another dead zone that I'm not looking to trade in. Using the high and lows for my ideas of where I think price could reach for if it purges one side. So if you play price out, you see we run the low first. So now we go down to the 1 minute time frame. So at this point, you're looking at the price action. Do you think price is feasible to run to these highs? Absolutely. Why is it feasible? You can see it almost looks like a triple top, double top, or equal highs, where there's retail resistance. People think that price is going to come down, resist, which could be the case, or price could come down, run all the way up here, straight through it, not even show any signs of respecting it. But there's an idea formulating from this break here. We play price forward, and we're basically doing the same thing. We're waiting for the very first fair value gap that we can get. There it is. That's your very first fair value gap. You would look to go long on that. Wait for price to hit that, and then go long. Price hits it. It barely. It missed it. Did it hit it? No, it didn't hit it. We'll speed it up. Yeah, you would have missed. Honestly, you would have missed entry there. And you can see here, look at how price continues going higher. Like I said, you're not gonna get it every single day. But you can see this is literally the same thing as the ICT silver bullet. Same thing as the Asian session model. And soon enough, it's the same thing as the New York session opening model. It's literally the same thing. Like, the pips are there. This is an ATM model. Literally, you can milk this as much as you want. Starting from a very small account and a large account. This thing can do damage, guys. 20 pips, 10 pips, 15 pips, you can do damage in the market. People don't realize it. And we don't get there. Yep. We don't get back up to that high right here. But you can see how it runs all the way up here, taking out the buy side. Quickly, too. But once again, before I move on, it's so funny, man. I just love seeing this. It's just amazing. Where's that PD array forming, guys? Where's this PD opening price, or London opening price, essentially? 2 a.m. This is the opening price for London session. Where's the PD array forming again, guys? I know it doesn't hit it. It doesn't hit it. It doesn't give you the entry that you're looking for here. And in theory, you could probably use this as probably a breaker. So price comes down, takes out a low, false break on this low here, runs back up into the swing high. You wait for price to trade back into it, and then you go long. But where's the fair value gap forming? It's forming in a discount, guys. That is not random. And we showed so many different charts. We showed UJ, we showed DXY, we showed UJ. The same thing formulating above the weekly opening price. And we saw here. Where is it at? UJ. It's the same fractal idea that you're seeing here with that fair value gap that formed on the 1 hour. Where's this fair value gap or SIBI being formed? Above the weekly opening price, guys. What's happening here for gold? For this lower time frame fractal idea, PD array is forming below 2 a.m. opening price. Here we can see we don't get the entry, but you can see how the idea is formulating for you to get the cheap buy. It's too easy. It's too easy. Some of these setups are really easy. People just overthink the process. And all it takes is a little bit of studying. Look at this. I could already tell. Just looking at this. Just back testing this really quick. Because it's not like I trade London anymore. It's just not worth my lifestyle. Here. I'm going to walk through this once again. I'm saving the best for last. I told people, you want us to know how to trade every single session in the market? This is how you do it. If nobody else is going to talk about it, I will. Here you go. People want to make money. People want to feed their family, put food on the table, pay bills. This is how you do it, if you're a trader at least. Buy side, sell side. Right before London open. 2 a.m. opening price. You see here? Doesn't take out the low, because you can't see it with the horizontal line here. Does not take out the low. What does it take out first? Buy side. No bias is being played out in this model. But there are times where bias does enhance the idea in the model, and it runs for larger amounts of pips. That's the only difference. Price breaks this high. Wait for the first fair value gap to form to go short. You can see it's here. Right there. That's your first fair value gap that you're going to go long on. Short, sorry. You see you would be in drawdown. Play it out a little more. Speed it up. There you go. You just watch your London session setup. How much more would a trader need? How much more does a trader actually need now? That was the very first fair value gap. Yeah, you ate some drawdown on gold. Okay, you had risk. You had proper risk management. Not a problem. You're not sweating. You're not tapping your foot. You're not gritting your teeth. You're not tapping your finger. You're not checking your phone constantly because you knew you risked properly. So if it hits your stop loss, you're all good. And look what happens. Price sells. Melts right back down to this same fair value gap. The same swing low that we marked off here. Below that dead zone low. And it's the 1 a.m. swing low here. Could it become any easier? I don't think so. I just don't think so. At this point, it's just like I said, like other people have said, it's like an ATM model. This thing prints you 5 handles, 10 handles, 1 handle, 2 handles. It prints you pips, man. Honestly, prints you pips. And if you hold and see it through, you're going to find some success. And you're going to find winners that are large. You're going to find winners that are small. You're going to find a lot of setups and do a lot of things with it. 1-to-1 setups, a 3-to-1, 5-to-1, 6. You can do a lot of things with it. But this is such a small idea that can be scaled up on another level. If you find the higher time frame trend and this aligns with it, man, you're catching probably the best price possible. Now, once again, everyone's going to be like, this is all you talk about. Yeah, because this is all the market is. What else is there to talk about? It's not no new model. It's not no new idea. It's not like, they changed the market. Now we all have to readjust and learn how to trade again. No, we're not adjusting anything. It's always been this way. It's just that we probably weren't knowledgeable of the idea of the model. Now we are. It's out there now. People know this now. And after today, people are going to easily see, London setup? Too easy. Too easy. What is this again? 2 a.m. opening price. Where's that PD array forming again? Clearly in a premium. It can't be random, guys. It can't be random. Why in the world would they make this fingerprint up here? Why would they make this here? Why would they make the fair value up here instead of down here? Because they clearly want to set this up for some type of sell scenario here. They're giving you insight already. They gave you insight here. Yeah, it runs a high. Oh well, you can't win it all. Another fair value gap here. Another opportunity to go short in here. Yeah, it runs above it again. But then it finally crumbles, guys. Finally crumbles. And after taking out, it's funny because the model, let's say you didn't catch the sell. Right? Let's say you didn't catch the sell. Is there a buy setup here? Yeah, there could be a buy setup as well. Where's the buy setup? After taking out the 15-minute swing low, which is where? Doesn't do it here. Does it here? What's the first fair value gap that forms, guys? Here. Whoa. It's the same idea, but just inverse. Where is this PD array forming? Below 2 a.m. opening price in a discount. Why is it doing that? Because it's probably setting itself up to buy. You can see how it taps down with the black candle. See it wicks into it. Odds are it's probably going to go long again. And what is it going to aim for? Probably the most recent 15-minute swing high. So if you go on the 15-minute to where we are currently in price, right? If we're looking for a short-term target, next 15 minutes, it probably would be this high here. That's that 15-minute swing high. What's above that high as well? Buy side. Buy side liquidity. Right up there. Go back to the 1 minute. You find your setup to go long here for gold. And we want to see price get back up to this high potentially. Press play. And it's the end of the session. Now, you can do with that information whatever you want. If you want to collapse your trade at the end of the session, you can do that. We can see how price continues on into the next session. Gets to that high. Gets right to that high. I wonder what happens after it takes this high. Let's see. I have no idea. Let's see. Does it continue going higher? Way higher? Yep, it continues. So the market still wants to be bullish. But that's how I'm formulating the trade setup. And what is this? Where is this occurring to? What's this? 5 to 7. Right here? So funny. What's this? The next dead zone, guys. Dead zone? That's a dead zone here. This is another dead zone. I don't trade between 5 a.m. and 7. Don't trade this. The idea of you trading here most likely is going to be unfruitful for setups. Yes, I know you're seeing the market go up. But I'm telling you, when you flip the coin is not for you. It's most likely going to have some type of phase that you're not likely to want to trade, which is normally going to be a consolidation. If that session has the probability of giving me a consolidation, I don't even want to touch it, like I said. So I would miss this. Even though it's going up, I would miss this. It's okay. Then I would go into the New York session. And it keeps going. It keeps going. Let's say we were still looking at this idea. Right? We're still looking at this idea. This is the next dead zone. That's the low. This was the high just prior to 7. Go back to the 1 minute time frame. Right? That's your dead zone, guys. Look, the high and the low. Buy side and sell side. Showing you how to trade London and New York. All in the same day. Wait for what? Price to break the swing high and give a fair value gap. Here's the fair value gap. 1 minute. Here. You want to wait and see if price gets back into it. We also have another fair value gap here. We can see here. Here to here. Look how quickly price runs that. And where's that low? Yeah, it's down here. Look at the low. Look at the low right there. Look at how it's trying to... It looks like it's trying to get there. But the whole time... And then news probably kicked in. Which is Tuesday, right? I wonder what news session was that. It was something here. The jobs opening. The actual. Doesn't... Like, these numbers don't mean nothing. You want people to know it doesn't mean anything. The higher time frame is controlling where the price action is going to go. But you can see, look at how the ideal sell scenario, once again, man, done said it several times throughout this whole live. Where's the PD array of forming for this session, guys? Once you start seeing these things, you can't forget it. I'm telling you. Once you learn it, practice it, you're like, dang, these setups come so often. I wonder Deontay's getting these setups. Yeah, because I've seen it too many times, guys. The muscle memory is there. What's that? That's 7 a.m. opening price. That's the New York Open. New York Open. Where's these PD arrays forming? Where's the fair value gap forming? and a premium. Too easy. Price trades into it. You have a sell setup, guys. There you go. And it runs right back to what? Premium once again. Look at how it's threading the needle or threading the line in the sand. Comes up. This is the line in the sand here. Look at how it comes up. It comes up above it. Finally gives a setup. Comes below it. Comes back above it. Gives another sell setup. Why did it come up here to sell again? Because it's ideal. And it's probably some type of PD array again that it wants to run into before giving another short opportunity going to the downside. And then eventually the news came out and jolted price straight up. Which, if you only had suspected it to go higher, then you would have been right. And then price shot up. But you definitely was able to capture great amount of pips from this. Chart's getting sloppy. From this down to this. And this is gold, guys. Gold pays, too. It's not like I trade gold every day. And that's the setup for New York. You just found a sell setup right there. Did we ever get back down to this low? No, we didn't. But could you have made substantial amount of profits from that PD array? Yes, you could have. You would have been happy with that. And you probably would have been able to have a trailing stop loss or take partials before this up jolt at 10. Notice how it happens exactly at London close. Quick reversal. So it looks like the price is going down, 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 down. About to come down, and then London close, take off. Just shoots right up. And you got to live with that one, honestly. A lot of people don't take that too well. I have a 65% win rate when I am trading, but I'm still struggling. I don't know why I am stuck. How can I solve my problem? You got to be selective. And you got to be really selective on the days you trade. So, like, I have a filter. My filter is, it starts off with the daily chart normally. My filter is, if yesterday was a large candle, Deontay, do not look to trade for huge setups tomorrow. Because you're most likely going to run into a small range candle and the market is going to psych you out. For example, let's just check the daily chart. Let's look back before this candle here. Let's look back to like the very largest one that we have in price action, right? Before this one. You can see it's this one here. And even if you weren't looking at this one, it's that one or that one. I want you to look at all those candles and tell me what's happening after those candles form. What's physically happening to the size of those candles after you get these large candles like this. What happens right after this candle? What happens right after this candle? What happens right after this candle? What happens? The market gets small. Market gets small again. Look how small these candles are compared to this candle here. Look how small these candles are compared to this candle here. The market likes to work in ranges. And normally, if you get the large candle, the next day, what I'm telling myself moving forward, I know that the market is going to go small. And I'm waiting for it to go small. But during the small candles, I know that day, today, right? Let's say this was yesterday and this is going to be today. I know, don't look for large setups, Deontay. Keep it calm. Keep it classy. Don't look for anything flashy. Don't look for anything that's going to be like stupendous in like amount of pips. Like I want something really small. I want 10, 15. I'm done. Same thing. After this, then I can start hunting for larger setups. Then things could probably open up more. I could look for a setup for 20, 30 pips, 40 pips, 50, maybe even 100 at times. Eventually, it's going to come to fruition because you can see what happens after this candle. Now, if we're not looking at the large candles and we're looking at just the small candles now, what happens after this small candle? Get a large one. Because I know tomorrow I should be gearing up and hunting tomorrow. But after this, see how Tuesday, for this example, the next day I shouldn't be looking for a large setup. Even if the price action gives me a large candle, it's okay. I'd rather play it safe. That's why I have a larger win rate I'm very selective in what I'm doing. I'm not taking trades just because I want to take trades. No, I'm taking trades specifically when it hits during the session, when the market is small and ready to expand. I'm not trading the market after it's already ran this high. See how high price is? Large, large, large. I'm waiting for it to get tight like this. Because I know sooner or later it's not going to be tight anymore. It's going to explode to one side. Eventually the market's going to want to move. It has to. Look how tiny this candle is. The next day, large. And then it starts the new trend. And then after a while, it stops printing large candles. It needs to rejuvenate. Small, 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 large. It's not every day that you're getting a large daily range. Think about that. Imagine if every single day was a large candle of over 500 pips. Every single day, each candle was more than 500 pips. Think about how the market would look. Every single day, it's just large. Every day, you wake up. Every single day, you get a candle that's this big. Not this big, but you get the idea. You get a candle that's this big every single day. Every single day? No, it's not going to work like that. One day, you're going to get one like this. Another day, you're going to get one like this. And it's when I get this day like this, I know tomorrow, oh man, I have opportunity to eat. But after I eat, I stop being greedy because I know the next day I can run into this small cycle. Don't want the small cycle. The small cycle sets up the large cycle. That's what I'm trying to catch. So I already have a filter mitigating how often I'm trading. Another thing, how many times are you trading in one session? Are you taking 10 trades in one session, or are you only taking 5? How many losers does it take for you to say, I'm calling it quits? Some people take 20 losers in one day, and they get one winner, but then they're still in drawdown for the day. When are you trading? Are you trading during the New York session, or are you trading during the New York PM session? Are you trading during all the kill zones that are actively live when there's an actual entity in the marketplace to start gearing market up or down? Or are you trading when they already packed up shop, left shop, and they took a break? Most likely you're probably trading during a dead zone. And if you're not trading during a dead zone, then you're most likely over trading and you're over leveraging. I don't trade as often as people think. But when I do trade, golly, does it hit? I'm telling you, it hits well. For me being patient. I'm not a scalper. I'm not a scalper. I'm just a trader that's multi-dimensional. There are times I'm scalping. There are times I'm looking for swing setups. There are times I'm holding trades for 3 days. I'm just multi-dimensional. I'm not one size fits all. I'm trying to do a little bit of this, a little bit of this, a little bit of that. Because some things are not meant for everyday trading. And that's another thing. Monday through Friday. What days are you trading? Are you trading every single day? Monday, Tuesday, Wednesday, Thursday, Friday, and even Sunday? At one point in time, I had to tell myself I have to pick at least 3 days out of the week that I truly want to trade. Most likely those days are Tuesday, Wednesday, Thursday. I've already now cut this out, cut this out, cut this out, cut this out. Does that mean I can't find setups on Sunday, Monday, and Friday? No, I could. I definitely can. I know I can. I choose not to. Because I know psychologically, if I catch a big winner on this day, that may make me too excited or too stimulated. And I'm like, let me go in Tuesday and grab more pips. And then I lose everything on Tuesday that I gained on Monday. That sucks. I've been there so many times. I don't like to trade Friday. I hate trading Fridays, guys. I don't trade Fridays. You don't hear me, or you don't normally see me send a picture to the chat on Friday about a setup. Because I don't trade Fridays. I literally don't even look at the day, guys. I don't even look at this day. want you to understand. I go about my day. I wake up, eat breakfast, work out, hang out do whatever I have to do throughout the day, and then at the end of the day, I'm here with you guys on Forex Fridays at 8 p.m. I had no idea what UJ did during NFP. I knew it was most likely going to pull back, but did I watch the news event occur? Absolutely not. Because one, it's NFP. Two, it's Friday. Deontay doesn't do Fridays. I don't do that. Sundays. Yes, sometimes there might be an opportunity. Open gap. Trade it. It's not as feasible as I like it to be. The probability of the gap opening and then finding a setup, like if price gapped up, right? There's a gap up and price trades back into the gap. Sometimes that model doesn't work out as often as I would like it. Compared to like the Asian session model, that thing almost hits every day. I'll be honest with you. Almost every day. And if it's not UJ that it doesn't form in, it's probably EJ or GJ or NJ or some other the yen crosses. It may not happen in UJ today, but I bet if you look through the other pairs, the Asian session model probably formed in one of the other pairs. You just happened to pick a pair the setup didn't work on that day. You can't beat yourself up about that, guys. You just can't. And I have. And I've learned it the hard way. And I want to save you the heartache and trouble and money and time. Get straight to the point and start making money. Disclaimer, not a professional. Consult your person that manages your funds and stuff like that. I'm just your average 24-year-old dude that trades Forex and happens to be pretty solid doing it. Am I the best? No, I'm not the best. I never sit and say I'm the best. I just see that the market is saturated with a lot of retail logic, and people aren't looking at it in very simplistic ways. That's all I've been wanting to bring to the community. That's it. Hopefully that was insightful. Can you teach us? Strong one. Is it? Can you? No problem. Can you show how to tell which pair will be a strong one? Is it an SMT? All right, cool. This is a good question, actually. No, is it this one? The lab work? I think it's lab work. I want to be sure. Was the New York session you were talking about? Are you talking specifically during a session? So like Asian, or like is it going to be strong overall? Well, I'll tell you this. From a macro perspective, if you are still watching and probably typing, from a macro perspective, so if we go rates, let's go like US, no. Interest rates, central banks. You don't need to know my location. Like I said, macro perspective, yen, trash. Completely trash. Nobody wants Japanese yen. So anything cross yen, most likely is beating the yen. That's how I see it already, from a macro perspective. When it comes to like the session, let's say we're looking at the Asian session model. Because I believe you were in the channel and I read you said that you like the model and you wanted more practice with it. If I was looking at the yen, this just has to, where is it? There we go. Nice. Let's say I'm looking at the Asian session model with a yen pair. Normally, the pair that has the tighter New York lunch session normally tends to do more favorable. That's how I see it. It's willing and it's geared and ready to move. If this red period right here is in a consolidation, odds are the Asian session is going to be very fruitful. You can see here, it comes down, it runs all these swing lows right here, doesn't take out the swing high, and it gears your setup even going into London into the next day, all the way up until like 1 a.m. or 2 a.m. You could see how it sets yourself up to go long to take out this high here. First is a day, and we'll look for an example like this. This is Sunday's one. And Friday. There's no Asian session there. I want to look for a day where the lunch session is very trendy. Most of these are very, you can see, look, time and time again, it's just consolidation. You're wasting your time trading here, guys. Wasting your time. Wasting your time. Hours of your life that you're just giving to the market. Hours. I'm telling you, people give hours to this market. Go outside, read a book, walk around, do something, man. Man, UJ's been looking really good recently. A lot of great Asian session setups. There we go. This is a nice one. 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 See how this market is not very consolidative? It's not in a clear consolidation, especially towards the end of the session. It starts trending up. Yeah, it was feasible. There's probably a sell scenario that got you 20 pips for Asian, because Asian clearly was 75 pips. Odds are I don't like to see this. I normally like to see when it's consolidating, because it allows me to know that I can get the run on the buy side, and it can easily run back down to the sell side here. You can see how it doesn't run to sell side until a couple days later. Finally gets down there. This low here. Finally gets there a couple days later. A day later, honestly. But you can see, look, consolidation. Look how it cleanly runs the low. Then it runs back up high to take out the buy side. Trendy. Alright, another trendy one. This one is trendy. It starts off consolidating, but look at how towards the end of the session, it's trending. See how it's trending at the end? Normally not ideal. Look how the Asian session just mulls over and continues trending in that direction as well. Giving 69 pips, nearly 70 pips to the downside. Instead of seeing it like this the whole way through. Then Asian starts here. Right? Asian starts, runs the low, then we run the high. Quick 20 pips, 30 pips. And if anything more, it's just the cake on top. Like if we were to look at, like, let's go down to, like, I'm seeing UJ too much. Let's say we went to EJ. See this? Look at that. Great example that recently just happened in price. Look at this. See how large this is, guys? Look how large the New York dead zone is. It's already trendy. It's already trendy. I know that the Asian session most likely will not give me the setup that I'm looking for. Doesn't mean it won't happen, because it could. It could still run the buy side and then give a nice short all the way back down here. But the odds of that happening, not ideal versus a consolidation. So let's find something compared to this. See how this is consolidating? It's mainly how I'm picking the pair. But personally, I've only been sticking with the UJ, mainly because, one, it's the US dollar. It's the world reserve currency. Second, the Fed's just recently increased interest rates. Third, their interest rate differential is large. 5.25 to a 0.1, negative one, which is insane. Something has to happen. People in Japan are hurting from inflation. I don't know when they're going to change the rates. It would suck to live in Japan, honestly. They need to do better, honestly. The whole system needs to do better. I mean, we're not going to get into politics. But we can see here. Actually, that's not it. That's a Monday. Sorry. Here we go. See here, this is consolidating. Look how it runs the low. It runs a 15-minute low. Runs back to a 15-minute high. Feasible setup. You can see the Asian session was 38 pips. You were definitely able to grab 15 or 20 out of that. And it even continues trending all the way into London. And it goes into the heart of London too. 3 a.m., 3:30. Look how it makes the high of the day here. Sells off. You got that New York auto trade entry right here. New York session sell off too. I can see that as well in the chart. London. New York OTE, this high to this low, price sells lower here. And that's how I'm hopefully that answers your question. No problem. My pleasure. Yeah, consolidation. See? Look how much more range the market wants to, it looks like it wants to breathe after being held like this for such a long time, for so many hours. It finally says, let me stretch out. And it does it multiple times. Now, yes, there are times where it doesn't, like this. See this one here? Consolidates all the way through. Even though it might have been ideal, still get this. But it's still on odds and probability. But like I said, normally I like to see it consolidating because I'm going to be able to get a run on one side to the next side. You can see here, too. Here, mainly it's tight. It's consolidation. It's not as trendy as the first example I showed you for EJ. Runs up, some type of sell scenario here, breaks down, after a trade entry or something, finally melts. And that's how I'm normally gauging that. And like I said, the same thing is occurring for the the London session. So just one more example before we go. One more example. And this is using gold. Because I know a lot of people always want to hear about gold so often. Look at this example here, guys. Last one for the night. I know I was talking a lot, and I definitely had that hiccup with the Zoom. High, low, and shout out to a fellow trader for holding it down today and keeping the page moving forward. I really appreciate that. You don't even know. Everybody wants to know how to trade London? Here you go. Another example. This is April 27th. So if you guys wanted to look at the example yourself on your own free time during this weekend, right before the session starts. This is 2 a.m. I'm not going to change it. It's 2 a.m. You see it runs the low too. Let me just bring it back just before 2 a.m. You got your swing low, you got your swing high. Clearly we can see this market is consolidating during this period. Midnight all the way to 2 a.m. It's not lengthy in pips. It's not down. These 2 hours, 1 to 2, consolidating. It's all range bound. That's perfect. Because we know if it's range bound here, where's the excitement going to come? During the kill zone. Something is going to expand and allow price to stretch. Press play. What does price do immediately? What does it run? Sell side. Mark that off. Buy side. Go down to the 1 minute. Looking for the very first fair value gap that I can find. Going here. Fair value gap here. I'm going long there. In the fair value gap. The top of it, the middle of it, the bottom of it, wherever I can get the market order or the fill. At this point, I'm normally just sitting there with my phone. Or I'm sitting here on TradingView waiting for it to tap into the fair value gap so I could get a market order. If price does run higher, and I'm able to type it in as quick as I can and put a buy limit here so price comes down, hits the limit, I will do that. Saves me time. And I'll have to sit there and wait to see if price is going to hit there or not. I can set up the whole parameter. If price continues going up here, I'm typing in the buy limit. I'm putting in the 15 pip stop. I'm putting in the 15, 20 pip TP. Boom, price comes down, hits me. I can enjoy the rest of my day without being a slave to the chart. It's all about freedom here. Wow. Like, it's so crazy when you see this, guys. And this is an example that I haven't even looked at myself, you know? This is all live and raw. It's all uncut. It's not like I sat here and prepped. Okay, let me go back to April 27th, 2023 and show them this gold setup. No, I had no idea that this setup was here. But going through it, I knew that it's normally forming the same way, guys. The same way. It's crazy when you see this. It's like really outstanding. The same model, I showed the model, Asian, New York, and London. Wow. What more can a trader ask for? I don't think anybody should be asking for anything else, in my honest opinion. How much more simple can trading be after watching this video? You've got an ATM machine, literally. You're staring at an ATM machine. You know an ATM machine. You know how to make money in the market now, guys. No excuse. No excuse, guys. And I'm only this way because I want better for anybody that follows me or subscribes to the channel or that listens to me. Sometimes, I may talk about things that may not be as serious to you, but to me it is serious. Don't waste your money. Don't waste your time. You got one life on this planet, guys. You don't have a second do-over, guys. Get it right the first time. Yeah, you're gonna fail, but push harder to get it right. You got one life. I'm telling you, I'm only 24 years old. I want big things I think of myself as a CEO, a CFO. I don't think of myself as this regular 9-to-5 dude. No, I don't think about myself like that. I know I'm not the average person. I don't think like the average person. Neither are you guys. Especially if you're watching this channel. I know you're not average. So get after it, guys. Get after it this weekend. Study. Do whatever you got to do. Make the time. There's no excuse now. You know how to trade Asian. You know how to trade London. And you know how to trade New York. You have 3 sessions. And I know some of you guys live across the world. I live in New York. And it works out for me to trade New York session and Asian. I don't trade London. But if you live on the other side of the planet, compared to where I live, I know London session is normally the time for you to trade. You got it. It's right in front of you. Hopefully this was insightful. If there's any question at all, please let me know now. I am going to go rest my head. Appreciate it, guys. Thank you. Much love, guys. All right. I'm going to give it like 1 minute because people probably typing. If they are, if you're not. And if I don't see a question in the next minute, I'm just going to probably end it. Yeah.
Hello, can you hear me?
Hey, yo, what's up?
What's going on, bro? Nah, I just want to let you know, like, you're literally, like, you're part of the reason I really look forward to Fridays, man. Like, reviewing price with you like this, I feel like it's really helping me. So, wow. I just want to let you know, like, bro, keep doing it. I'm going to be here all the time, like.
Man, that means a lot.
I really appreciate this you're doing, bro, like, for real.
Nah, man. Wow, man. That means a lot to me. You don't even understand. I'm so thankful. I'm just so thankful. I just want to give.
I'm not gonna say anything. It's late. I know it's like one of the later ones you've done, like the last few weeks or whatever.
Yeah.
So I feel like I speak for all of us. Like, get some rest, bro. You've been killing it, bro, for real. Like,
I appreciate it.
I passed my evaluations and shit, and I don't know, bro. Like, I feel like just from where I started, like in November.
Yeah.
Of like last year, like.
Okay.
Like, I never like progressed the way that I have in the last like few weeks, few months. Wow. After watching your stuff and like finding you and like talking to you a little bit through the Telegram or whatever.
Yeah, man.
Nah, bro, like you really can help me. So I just want you to know, like, it's all love from my side for like I don't even know, like I can't even see like an end date to it, bro. Like, yeah, I'm really thankful. Like, I can't put it in words, man.
I appreciate it, man. Your words mean a lot to me, man. I take it very serious from what you just said, man. Like, I just want to give to the community. I just feel like it's everybody's right to understand what these markets are doing. And there's a lot of fraudulent people out there. No lie. Like, I've been caught up in a couple of things myself as a young trader, you know, being a college kid, being broke at one point in time, you know, wanting money, being desperate for certain things. And I just didn't want other people to go through the same trials and tribulations I had to go through when I know this stuff, you know, and I know I could help guide people. I may not know everything to the T, you know what I mean? I'm not sitting here saying I know 100% about Forex. There are so many things I could learn, but I know I'm definitely content with the education I've gone through and the things I've learned and the things I've studied by myself solely. I think it's just enough, and I'm satisfied with what I have. If it ain't broke, don't fix it. And I've been showing this week after week, time after time, and I just wanted to get it out there because I know more people are going to be like, whoa, I didn't know Forex was that easy. And I'm like, yeah, neither did I.
Dude, like my cousin is like graduating tomorrow from college and applying to med school and shit.
Yeah.
And now she put in like hella work to do all that.
Man.
And I'm sitting here looking at this and I'm like, am I tripping or is this like really this easy? Like there is no way.
Yeah.
And then I started doing it and I'm like, wow.
Yeah.
Like, wow.
Wow.
This is. And I try to tell my homies and stuff, like we at the skate park.
Yeah.
Skating and we sit on the side.
Yeah, man.
Like, all types of bullshit. And I'm telling them, I'm like, bro, look at this and tell me this isn't insane.
Yeah.
There is so much money out there.
So much money. People don't even understand. I'm so glad this is the open conversation, brother. Like, honestly, like some people don't understand how feasible and I'm not and I don't want to sit here and say it's easy, because at first when I came in trading 5 years ago, I was completely lost. I was part of like IML, all this retail stuff, and I had a friend. Just a little backstory, because some people want to know like how I started trading. I started trading mainly around college, like freshman year, sophomore year. I started trading mainly sophomore year. I started really getting trade after I transferred from my two-year school to my 4-year school. I really started buckling down because I was like, man, I want to get cash. I don't want to be a broke college student, you know. Bro, I've been there, bro. I've been in the dorm. I spent hours sitting there studying, going to the gym, sacrificing a lot of my time, because I know a lot of people say, yo, you're in your 20s, YOLO, live life. I know that's not it, because I know in the next 10 years, those people that were in college saying YOLO, they have no money in their pockets. I know that. They're in debt. They don't know what they want to do with their life. And I sat there in my dorm for hours, weeks after weeks, months after months, semester after semester, teaching myself something that I know it's going to pay off. And now look at me, you know? I'm not sitting here saying it's the end of the road, but I do know I'm way ahead of most people my age that should have been doing what I was doing back in my... Everybody thought I was doing something that made no sense. You're wasting your time. You don't know what you're doing, you know? I even have relatives doubting me, you know what I mean? Relatives saying, you don't know what you're talking about. This stuff is a scam. I'm like, bro, I just paid off my credit card bill doing this. What are you talking about? I just paid for all my landscaping and planting for my house. I brought all the trees off of trading. I brought my laptop off of trading. I did all these other things without actually having to clock in and do a job, you know what I mean? That's really what's inspiring for most people. It's not as simple as people think, but when you get the right information and you get the right person to put it in front of you, the sky is not even the limit, man. And I'm just happy. I'm just happy. Like, I know that there's a lot of scammers out there. You could go on YouTube. You'll see, I'm not even trying to knock anybody's hustle, you know what I mean? But it's scummy. It's scummy to me. It's just scummy. We got other people on YouTube that will sit here and try and teach you some nonsense, some real garbage, and tell you, oh yeah, this is how the market works. And then you go and do it, and you find no feasible setups. You find no consistency. And I'm just like, bro, there's got to be something different here. And then that's when I was like exposed to ICT and this, section, and third, and I went through my trials and tribulations, mentorship, stuff like that. And then finally, I was just like, I was at a certain point in my trading career when I told myself, I was like, D, you got to buckle down. And you got to make yourself a formula, you know? You got to make yourself a trading model. And you need to sign away as a contract and say, you're never going to break this contract. Once you sign this, it's done. You can't go back from here, Deontay. And ever since then, ever since then, things has been smooth, man. Smooth. I can't even, my parents can't even believe it, bro. People around me can't even believe it. You know what I mean? And I just want everyone else to feel the same way I feel, you know? I want them to avoid all the scammers. I've been scammed for thousands of dollars in college. I was just a broke college kid just wanting to learn how to trade. Oh, no, you know what? I'd rather take signals. I'd rather do someone managing my account. I've had people take thousands of dollars. I've blew tens, 20, thousands of dollars on stuff that I shouldn't have been doing. But now I'm saying, wow, I could save people from that. And I'm just going to keep doing it, bro. Like, I don't care how long I have to do this, bro. Every Friday I'll do this. It'll be the same thing. Some people are going to sit here, all he talks about is this. So, yeah, but you show me something even more consistent. You can't. It's all in the chart. It's all in the chart. And I know I got a little like emotional there on you guys.
Nah, dude, bro, you deserve all the accolades. Like, there's no doubt about that.
Nah, man.
Bro,
Appreciate it, bro.
I'm gonna wrap this up for us. It's getting late.
Yeah.
Let's call it a night.
Facts.
I'm gonna talk to you next Friday, bro.
Facts, bro. You do your thing, homie. I really appreciate you, bro. No doubt. And we're gonna see it to the end. Every single one of you guys. We're gonna see it to the end. Whether you're there or not, I just know you're gonna be there. Somebody, okay, cool. Alright, guys, I'm gonna call it a night, man. Whoa, another Forex Fridays, man. This one was a bit, man. Ah, man. Good night, guys. I really appreciate the support. It's gonna be up in a couple minutes. Love everybody. Peace. Wow, bro.